Factors coming in. We're 8 seconds away from the open. Who's going to move when we get there? We take a look now. So the stock 600 is currently opening higher this morning, 0.6%. And if you break it down by sector, you've got most of them in positive territory, led by real estate, top of the basket, higher 1.9%. Bottom of the basket, tech, down 0.8%, but 17 out of 20 sectors in the green this morning. Look across the continent, you've got the CAC 40 higher 0.6%, the DAX flat, but the FTSE 100 also flat, and the FTSE 100 higher 0.1%. So it's green across the screen as we look towards PCE later, Kriti.
Yeah, and seeing a little bit of an interesting kind of dynamic here. We were talking about that tech being the laggard in the States, retail being the potential outperformer. This morning, when you look, it's still kind of the opposite. Remember, we are still early days. We are still seeing the shakeout. But you talked about that leadership. My eye goes immediately to some of those individual movers, for example. Your biggest index weight, and I really like to look at this from an index perspective, is Novo Nordisk. So you're seeing your healthcare names, which, by the way, have been the outperformer all week long, on the back foot. So again, a little bit of that rotation trade as opposed to some sort of fundamental story driving it. But we were also talking about the commodity picture. That's where the leadership is. Some of your biggest index contributors on the Stock 600, Shell at the top of the list, alongside ASML. You usually don't see tech and commodities rally together unless it's kind of more of a cyclical expansionary narrative. Today, it just feels like it's net reversing the move we saw yesterday.
Yeah, as I say, tech at the bottom of the basket this morning. Looking into those particular names we were flagging before the open, ASML is higher at 0.1%, but ST Micro just flat to the downside. So not a lot of read through yet or at all this morning.
Absolutely, and Diageo is going to be another one that I point to, and I think that might be a little bit of a consumer read-through as well. In terms of some of your biggest volume movers, National Grid really taking a lot of the attention here. Remember, this is a story that we've been watching quite substantially in terms of their balance sheet, so we're going to keep an eye on that as well. We continue to talk about the healthcare sector. GSK is going to be one of your big ones as well. Total keeps coming back into the narrative. Remember, you're seeing a lot of commentary from the C-suite there, talking about potentially a cross-listing with Paris and New York. How do you actually factor that into the macro narrative is a different story, but it's interesting that that keeps coming up, especially when it comes to some of the leadership, really, in the oil space. If Guy Johnson was here, he'd talk about oil multiples.
Do you miss him?
A little bit. I'm not going to lie.
But I won't take it to heart.
Lizzie, it's not personal at all, but it's only because he's conditioned me to think a certain way. This is the Guy Johnson effect. He would also say, let's go from the micro to the macro. So let's talk about that a little bit. He would say, let's talk about what this rate story is, because ultimately that's going to show up in this macro narrative as well as we kind of shake out whether we are ultimately late cycle, early cycle, how long is this going to really last, and is really the rest of the world at the helm of the Federal Reserve in terms of where they stand. Take a listen to what John Williams at the New York Fed had to say.
Looking at this broader context, the behavior of the economy over the past year provides ample evidence that monetary policy is restrictive in a way that helps achieve our goals. We're seeing clear and consistent signs that the imbalances between supply and demand in the economy are receding, and we've seen a broad-based decline in inflation.
New York Fed President John Williams there saying, look, policy is still fairly restrictive, but he may be starting to see a little bit of division. That is not the consensus view when it comes to the FOMC. Lori Logan, for example, a Dallas Fed president, saying things aren't restrictive enough. Let's bring in another voice here. Karen Ganesh, head of investment communications in the UBS Global Wealth Management Chief Investment Office, joins us this morning. Walk us through this divergence at the Fed. How concerning is it from an investment perspective?
Yes, well, clearly we've got the Fed trying to grapple with a combination of growth remaining pretty robust, so no imperative to cut interest rates, but also inflation starting to fall and some signs that there is some weakness coming through in the retail side. So obviously they want to make sure they're not putting their foot on the economy too hard. So they're trying to balance all of that out. I mean, our view is that the Fed is most likely to be cutting rates around September, but what you're hearing right now is that debate both around when is the right time to start, but also what is the appropriate level of interest rates. And I think you're hearing both of those debates coming through, and that's what's leading to some of this apparent divergence at the Fed.
So what do you do then with this bond market and with the stock market? Are they even related at this point?
Yeah, well, you've seen kind of correlations moving all over the place. I mean, traditionally, when people are worried about the Fed, you'd normally expect, that dynamic where when yields are rising, then stocks are falling. We've started to see some of that coming through in recent days. But I think the overall trend that we've seen so far this year is really pretty decorrelated bond and equity markets. And you've seen that equity market breaking new record highs, despite the fact that bond yields have actually been edging up. So, I think that speaks well for investors who are looking to diversify, and it is reducing volatility at a portfolio level.
And so we've had 4 straight months of gains for the Bloomberg Dollar Spot Index. May is primed to be the first month where we actually have a down month since December. It's been a rough ride. It sets us up for a snap higher off the back of the core PC number if it proves more stubborn than expected. Do you think there's further room for the dollar to run higher this summer?
Yeah, near term, the Fed is likely to be one of the later central banks to cut interest rates. So we're likely to see the ECB cutting rates first, the Bank of England cutting rates then probably in August. And we think that could lead to some very near-term dollar strength. But the bigger picture here is that the dollar has been pretty range-bound against things like the euro for quite a long time. And we think that the next big trade is going to be for the dollar to weaken in the second half once the Fed starts cutting interest rates and once the market starts pricing in a more convincing rate-cutting cycle from the Fed. So, we think that what we're telling clients to do is that if the dollar strengthens near-term, use that as an opportunity to decumulate and position yourself for dollar weakness later in the year.
Yeah, because I was going to ask you about how much of an issue divergence from the Fed for the ECB would be for euro dollar, but I also want to factor in the latest inflation data that we got this morning. Another surprise from France, we had one from Germany. Does it muddy the rate path ahead for the ECB beyond June? That seems to be cemented, well telegraphed already.
Yeah, I mean, well, we talked about divergence at the Fed. I mean, the ECB clearly has a much bigger task because it has all those members to try and get on the same page in a slightly consensual style in terms of when they cut interest rates. So I think what we've seen is that they've pre-committed to that rate cut in June, and that's highly likely to happen. But what we might see at the communication then is them stepping back and saying, okay, well, July is maybe a bit less certain, and then maybe in July we'll start to get more forward guidance on the next month. So it's clearly a consensual course for the ECB, but we think that ultimately once they start moving with some conviction, then that's going to be a train there where they're going to keep cutting.
So when we're talking about then this dollar story, I'm circling back to that. Is it You talked about positioning into weakness into the back half of the year. It's consequentially when the U.S. election is happening, of course, as well. Does the dollar at that point then serve as some sort of hedge?
It's very interesting that the dynamics, because traditionally the dollar is a risk-off hedge, and when people are worried about global markets, they seek the safety of the dollar.
Yeah.
But one of the key concerns we may have around the U.S. election is that both sides are likely to be talking about policies which are likely to mean a still wide fiscal deficit. We've already seen some weakness this week in things like some of the Treasury auctions, and if that starts to become a theme for investors, then that fiscal situation for the U.S. could lead to concerns about the dollar and dollar weakness, and particularly if that then gets exacerbated by any comments, particularly from Donald Trump, around the independence of the central bank, and that kind of thing could be, again, quite a negative for the dollar in the second half.
You said fiscal situation, and my ears immediately perked up. January 2025, we hit the debt ceiling again, first thing on the new president's docket. I love to say this because everyone's talking about Trump policy and tariff policy, et cetera, and no one's paying attention to how you hedge it. Play doomsday with me for a little bit. I'm a journalist. I can't help myself. What happens? We hit the debt ceiling. We have these negotiations. What happens to the bond market or the dollar? Is there really anywhere else for global investors to go?
Yeah, well, I mean, I think people have been looking at gold very, very actively in recent weeks and recent months because of that very strong central bank buying that we've had from emerging markets also supporting that trade. So I'd expect to see gold doing relatively well in that scenario. People might look at other safe haven currencies, things like the Swiss franc, even the Japanese yen can attract bids during those kind of times. So I think it is possible that you'd see strength in some of those other assets as well. Very near term, could you see some technical flows back into the dollar in that kind of situation? Yes. But if people are then taking a step back and thinking, okay, well, what currencies do I want to be positioned in over the medium term against a challenging fiscal situation, perhaps in the US, then they would likely move away from the dollar and towards some of those other, perhaps more stable currencies.
We're going to dig more deeply into the South African political situation with Jennifer Sabasadjo, our reporter on the ground, but I do want to ask you about the rand and the market implications, because we've seen it down on the worries about the potential makeup of a coalition. What is your outlook for the rand as it relates to the politics?
Well, I'll talk more generally about the emerging market currencies, because we think that's going to be quite an attractive area as we get into that time of dollar weakness in the second half. We like the Brazilian real right now, very high local interest rates, has been relatively stable over the past few months. And we think that kind of trade is the sort of thing that investors will be looking for in the second half as the dollar's weakening. Where can I get higher interest rates? Where can I get attractive carries? So we think a diversified basket of emerging market currencies could be attractive in the second half. Obviously, there are heavy idiosyncratic risks, as you highlight, so diversification within that basket does make sense.
So is that then just a story of picking up the yield wherever you can find it? My favorite, I'm not going to press you on the South Africa story, but my favorite kind of market read-through was South Africa offers some of the juiciest yield right now in EM. Now, a lot of that is risk premium that's baked down for a lot of kind of political concerns, so that's a different story. But in the context of a 2-year that's almost at 5%, is that what the bond market is right now, just a pickup in yield as opposed to directly responding to a fiscal fundamental story out of the States, for example?
Yeah, well, right now, if Fed interest rates are still above 5, then people are quite happy to just take that yield in relatively high-quality debt. As those rates start to come down, as there start to be concerns about perhaps a weaker dollar, perhaps worries about US fiscal policy, then we think we're likely to see more of that reach for yield. And I think that's what investors, as we get to the middle and the third quarter of the year, should start to be thinking about.
Okay. I'm asking everyone this. What's the floor in yields right now on the 10-year?
So we think it'll fall below 4. So we're looking for around 3.85 by the end of the year. So we'll put 3.8. I'll say.
Okay, all right. UBS Global Wealth Management, Kieran Ganesh, making a pretty bold call there. 3.8 by the end of the year. We thank you so much. And really quickly, as we talk about this bond market, we should get a quick check on the stock market as well. Lizzie was talking about how much I miss Guy Johnson. I got to do his sensational 6 and get a quick check on some of those stocks, because you are seeing very low volatility right now when you look at some of the bigger players. Your biggest move is really coming out of Nestle, higher by 1.3%. Schneider Electric getting there as well, down about 0.4%. But the rest, even Ferrari, unchanged right now. ASML, LVMH, your normal heavyweights, not seeing much action. That's your sensational 6. Let's get a little bit more into the nitty-gritty. Joe Easton is here with some of the individual stocks on the move.
So lots going on in the movers at the open of trading. Take a look at Telecom Italia. Now we're down 5%. The sale of their grid business to KKR has been approved. But the reporter in Italy pointing out that the news broke just before the close of trading yesterday, spurred a spike, and now we are seeing it giving up some of those gains. So it's a buy the rumour, sell the fact situation. Telecom Italia is coming down. It's a 22 billion euro sale. It is a big deal for them, but potentially priced in, as we're seeing in that move today. Then in terms of shipping stocks, a good Bloomberg report out from BI Bloomberg Intelligence on the terminal today. Have a read, saying that shipping rates are up 56% since the Red Sea issues at the back end of last year. Now that is a big spike, and it is beneficial for companies like AP Moller-Maersk, Hapag in Germany, and Frontline, the Norwegian carrier of oil in shipping. We're seeing gains across all of those. It's one of the best performing sectors that we've got in Europe this morning. Then we're going to look at deals, because we have got a lot going on in that space today. NatWest, we saw the government selling more than £1 billion worth of stock last night. That was priced at a very slight discount, but we're coming up very slightly. There was question marks whether the UK election would delay that, whether that would actually now be put on the back burner. But we're seeing the Conservative government continue to sell down that stake, and there is a lot more still to go. They've still got a massive chunk of that. Fraser's Group, Mike Ashley, he loves a bit of Hugo Boss, and he's buying more stock. He's still the largest holder of shareholders, and he's increasing his stake in the German luxury retailer Hugo Boss today. We're seeing Fraser's coming down very slightly, Hugo Boss edging very slightly higher. And then Alpha Financial over in the asset management tech space. There is a bit of a share sale going on in that one, a holder dumping some stock, but not really seeing a decline. We're actually up 2.8% for that one in the UK mid-cap space. We'll look at apparel. We all need to refresh our wardrobes for the summer, and we're seeing the H&M and Inditex share prices gaining a little bit today. We had Gap last night jumping 24% in the US following their earnings. That is maybe a bit of a positive one for those two. But JD Sports out of the UK had results this morning, and it's very, very negative, warning of more weakness in the US, where they now get about half of their sales. They're big partners to Nike, Adidas, all of those brands in the US, and they're seeing weakness. They're down 7%. And as we said in Stocks to Watch, AB Foods has an investor getting out of that stock today, selling a bit. They're still holding a large chunk of the shares, but selling a lot of stock this morning. We're seeing weakness in that one. Want to take you over to one of my other favourite spaces, the gambling sector. We got Flutter today. This one is weakening. Take a look at that one. The company leaves the FTSE 100 today because, as we know, they are leaving the main London primary listing, and they're going to the US, given they've done this deal for FanDuel, got a lot of their money coming out of sports betting, as I said before, all those sports like American football, baseball, that I do not understand at all. But Flutter coming down 7% because they're no longer in the FTSE 100. So funds, tracker funds, selling the stock this morning. Finally, you mentioned earlier the Salesforce issue yesterday, Critty, that hit all those tech firms. And we're seeing Capgemini today downgraded at JP Morgan. They go neutral from overweight. They're a long-term buyer of that stock, but they're recommending that you stop buying, and we're seeing it down 4%. Jefferies also cutting that on. It's a 30 billion euro French tech company. It's the worst performer that I saw among the large caps. Capgemini in France, down 4% in Paris this morning.
All right, Joe Easton from our equities team, lovely to have you. Thank you for that. Our update on the stocks that are moving at the open, 15 minutes in, and we're looking at the stock 600, currently flat to the upside. The FTSE 100 higher 0.1%, the CAC higher 0.2%, and the DAX flat to the downside. It was a surprise to me that JD Sports movement there off the back of its results. You did see a bit of a gain for JD Sports yesterday, helped by the US consumer stocks. Foot Locker 31% up, and that helped JD Sports yesterday. But as Joe says, this morning JD down 6.6%.
Yeah, it's interesting to mention consumer stocks, because when we're talking about those heavyweights in the sensational six, Nestle outperforming as well, higher by 1.3%, I believe, last time I checked. And we actually looked into some of the reasons for it. They were in a fireside chat with JP Morgan yesterday, really talking about the fact that these weight loss concerns from likes of Ozempic, for example, isn't going to kind of interfere with the strong consumer needs as well. So there's a really interesting kind of theme running through here, from apparel to bedding to even the likes of food and big box retailers that we're seeing across the board when we talk about the inflationary story. It doesn't seem to be getting in the way, and that's actually where we're going to go next in terms of some of the specific micro stories that we're going to get to and how it actually feeds into the macro. Coming up on the program, French inflation coming in higher than expected. Remember, it follows German weakness earlier this week, strength over in Spain. How do we make sense of all of it? We're going to look ahead to the wider Euro area CPI data due out later today. That conversation next. This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Markets Today. We are 20 minutes into the start of European trading. We have got the stock 600 flat to the upside, but I'm looking at HSBC here. Those shares are up 0.2%. We've just had the news that they're aiming to pick the successor to Noel Quinn, the CEO, by July. So rather like Rishi Sunak, we were promised a vote in the second half. The chairman of HSBC had promised us the successor news in the second half, and it's coming early. So we had his surprise exit in April from Noel Quinn, and now we know that we're going to hopefully have a successor by July. The shares up. Banking as a sector is up 0.3% this morning. As we look across Europe, you've got the CAC on higher 0.1%, the DAX down 0.1%, and the FTSE 100 higher 0.1%. But we can move from banks to central banks now, because we've also had some new data this morning. French inflation accelerating this month for the first time this year, and mirroring trends elsewhere in the region. This, of course, as we have the central bank preparing to lower interest rates next week. Christine Lagarde preparing her remarks on how she lays out the rate path beyond June, and we can get some advice now on how to do that from David Powell, our senior Euro area economist here at Bloomberg Economics. Good to have you with us, David. I just wonder whether the French and German inflation prints, first of all, do muddy the rate path beyond June, because we seem to know that June is going to be a cut.
I don't think so, really. When you look at the source behind the surprises that we've seen for the countries that have already reported inflation for the month of May, it's really energy costs. There's nothing the ECB can do about energy costs. Monetary policy doesn't have a big impact on those costs. What the ECB is going to be focusing on is underlying inflation, in particular services inflation. And if we look at the French report that came out this morning, services inflation dropped in May, and that's going to be welcomed by the ECB, and we'll see when the euro area figure comes out later this morning how that is at the euro area aggregate level.
And so in terms of the communications, how does Christine Lagarde communicate the path ahead? Because she's got to kind of say, we're really confident we're going to cut in June, but then she needs to be vague about the path beyond that, how does she strike that balance?
Yeah, probably what she's going to do is she's not going to endorse another cut in July. The hawks have already come out and said that they don't favor a move in July. They want more data, and that data is going to be the wage data that is released once a quarter. So after the data we have in June, we won't have data on that again until September. So it kind of rules July out, although there have been some members, such as the governor of the French Central Bank, who said we shouldn't rule out July, but he does not seem to be in the majority opinion. So she'll probably be very tight-lipped about July, certainly not endorse another cut. And if she does say, for example, we're going to need more data on wages, that's going to be a subtle indication, or a not so subtle indication, that that a movement before September is unlikely.
David, the common thread between the three major pieces of data that we got this week, Germany, Spain, and now France, is that energy continues to tick higher. Why are we not talking about it more?
Well, energy is ticking a bit higher, but if you look at this in a much broader context, these movements are very small. Not too long ago, inflation in the euro area was close to 10%, and now we're talking about going a little bit above 2 to a little bit more above 2. We're not talking about these huge moves that threaten to dislodge inflation expectations after the outbreak of the war in Ukraine.
So that's the monetary policy story. Let's factor in the fiscal as well. The outperformance, and I would say some of the strength you're seeing from some of these European countries and European economies, feels like it's really a function of the fiscal spend. How much of that is true?
I think we're seeing some improvement in the economic data at the start of this year, the data we've had for the first quarter, and more timely survey data, we're seeing that as well. Really, what that is probably is that real incomes are rising as inflation falls. So as inflation is no longer eroding people's purchasing power as much as it once was, they're able to buy more. And that probably explains the improvement in the economy we're seeing, and that's likely to gather momentum throughout the year as inflation continues to decline.
And as we look ahead to the PCE number later, and as we end the week, after those French and German inflation beats, which you've slightly discounted, how different is Europe looking from the US at this point?
Well, the big difference between the euro area and the U.S. is despite all the interest rate hikes we've seen in the U.S., the economy there remains relatively strong. That's not the same story in the euro area. Last year, for example, the euro area economy flatlined and the U.S. economy expanded by almost 3%. That's a big difference. And the ECB doesn't have the same problem the Fed does now in terms of really having to slow down the economy, because that's already happened in Europe.
All right, David Powell, Senior Euro Area Economist for Bloomberg Economics. We thank you so much for walking us through some of the dynamics that we're seeing in the inflationary space. In the meantime, as we were speaking about the macro, we should talk about what's been happening in Asia. It looks like the Hang Seng Tech Index is down 10% from the high that it set back in May. That weakness that you're seeing in the tech space really going global. That 10%, though, is perhaps setting the course for a technical correction. Do we then get to perhaps more accelerated speed, especially when we're talking about the pullback in NVIDIA, the pullback in Salesforce, what that read-through is out into Asia?
Yes, indeed. So we're currently, that's the Hang Seng. Here in Europe, though, the stock 600 is flat. Really not a lot happening this morning, Kriti. Not quiet on the news front, but it is quiet on the markets front, it has to be said. And coming up, we're going to be speaking to the chief economist and chairman at LBV Asset Management ahead of the OPEC Plus meeting this Sunday. Of course, it coincides with that Aramco share sale. There's plenty to discuss, and there's plenty at stake here for Saudi Arabia with this supply cuts meeting. So we'll bring you more on that next with Cornelia Mayer. This is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key.
You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Markets Today. We're about 30 minutes into the European trading day, seeing a couple of pockets of stories here. You are seeing a little bit of a rotation in the market, which kind of feels like, despite all the news flow we're getting on the geopolitical front, maybe not translating into the markets, perhaps just that rotation going into the weekend. Well, let's get to another story, because there is plenty to monitor this weekend, including, of course, the OPEC meeting on Sunday. OPEC Plus delegates have told Bloomberg that the group is moving closer to an agreement on oil output cuts that could stretch all the way into 2025. Let's talk a little bit about that strategy. We're joined now by Cornelia Meyer, chairman and chief economist over at LBV Asset Management. She lives and breathes the oil market. Cornelia, a pleasure to have you on the program. Walk us through that strategy here. Talking about cuts going all the way into 2025, I'm struck by the confidence of the market at the moment, especially from a macro perspective when we're talking about potential weakness on the horizon on both sides of the Atlantic.
No, absolutely. And they look at that potential weakness, and they look at, the ministers look at interest rates being lower for longer, or low for longer. So that really impacts them. The other thing that impacts them is, there's so much, you saw the US GDP being revised downward to 1.3%, for the first quarter. You see what's happening in China with real estate woes and with slow factory performance, and with really no more oil being bought in, or, not the amount bought not being increased. So they look at it, and then you have the speculative money, where a lot of the long positions were put into short positions. So all of this is a bearish market. Plus, you also have more output from the U.S., from Brazil, from Guyana, even from Norway. So they look at that and they go like, well, it's one side is the demand side, the other side is the supply side. So something's got to give.
Is there a question? You mentioned the U.S. supply story, and it's fascinating because just this week alone, we've had on the big oil front potential mergers announced, consolidation from ConocoPhillips, for example. Marathon Oil, Hess voting by their shareholders to be a part of Chevron as well. This consolidatory consolidation is the right word, that you're seeing in the U.S. shale market brings back some memories of 2015, 2016. I'm curious whether that's a positive thing in the long term, or is that turning into a more long-term threat on market share when it comes to OPEC?
It's certainly, if you're in the U.S., it turns on a threat. Sort of, you look at market share, you look at the big increase of U.S. production, but also you see these mergers. They always happen when the oil price is low, and when you expect it to be low, because obviously it's cheaper to merge when the oil price is low, because the companies are valued at a lesser price point.
But then thinking about the impact of growth on the oil price, I wonder how much the link is weakening between growth and oil demand because of the rise of electric vehicles.
Oh, you're absolutely right, and I'm really looking forward to seeing and I haven't put that into my model yet because I'm waiting for what I'm seeing in the US, the driving season, and not in the middle of the country, but on the coasts, you have quite a bit of electric vehicles. So what is the impact of EVs? And then also globally, energy transition. You know, it used to be that a percent growth in GDP anywhere could be put straight through to oil. Not anymore, especially not in OECD markets.
Yeah, and then when you've got the COP communique, transitioning away from fossil readily fuels in energy systems in a just, orderly and equitable manner, they say. How does that translate through? How quickly does it really impact the market?
Well, it does impact the market. I think that's that's a very long-term thing. But I see two things here. I see OECD, where you're transitioning away much faster, because energy transition is expensive, and OECD countries can afford it. But then I look at Africa, South Asia, where the money is not there for this easy transition, where it is still much more correlated, the oil price, or what the demand and the GDP. And mind you, the next 2 billion people that we will have on planet Earth by 2050, they're in Africa and they're in South Asia.
As we talk about this EV transition, we have to talk about the copper story as well. These momentum trades and the short squeezes that you're seeing in copper right now. And of course, we're talking about consolidation in energy, plenty of consolidation drama in the copper space as well this week. What is the story around copper, especially when you have a lot of geopolitical risk around it? We were talking about it in the context of South Africa this week, but the election in the States affects that EV transition story as well in terms of infrastructure investment. How does that show up in the copper price?
It will show up in the copper price, and you will see, depending on who wins, it will in the US, it will show up, because clearly when you have a policy that goes more towards EVs, you need more copper. But then there is more. The whole energy transition is not just EVs, right? You have all sorts of sources of energy where you need copper and base materials, and you also have China. China is actually, although factory output is slow, copper demand is still quite strong. So you need to look at China, you need to look at India, you need to look at also Africa. And you see it strong. And the thing is, again, when you have on the producer side geopolitical tensions, then you fear for the supply, right?
That's the fundamental story. Let's get back to the markets here, because at the very start of this segment, you specifically talked about, you used the word speculative positioning. I love that. Let's get nerdy. Where in a portfolio does copper and oil find itself? And the reason I ask that is because there was a time not too long ago where you bought a basket of commodities as a macro investor, and that was your hedge that lasted you 1-2 years. Are we re-entering that kind of reputation for the energy sector?
I don't think so, because with oil, oil and copper are sort of a little bit different in the sense that copper is, you always need copper, but copper is very much part of the energy transition story, and oil is sort of on the back foot of that story. So yes, it's correlated, but I think it's less correlated than it used to be. It's a little bit like what we've discussed earlier. Oil is no longer the clear throughput to GDP growth in every market. In some markets it is, in some markets it's not.
Now, oil, of course, is crucial to Saudi Arabia, and I just want to take us back to the OPEC Plus meeting that's coming on Sunday. Of course, it coincides with Aramco's share sale, Saudi leading the efforts to restrict output. I wonder just how reliant Saudi is on these output cuts to balance its books, and your outlook for the oil price longer term, because we hear that they need $100 a barrel. If it's going to be 75, 76 like the IMF's forecasting, can they really match that?
Actually, it's interesting. There are people who say it's above 100. There are people who say it's in the 90s. And then I've just recently heard from a very senior sort of oil ministry person. They're happy with the low 80s. It's very difficult because when you look at the Saudi budget, it's not. Some items are not in there, so it's very hard to. I feel people who tell me it must be X are very brave, and they're moving targets. And one thing we shouldn't forget: Saudi has enormous debt capacity. Saudi is still privatizing. You have another 0.65% of Aramco shares going on the market on Sunday, as you said. So there's that capacity. There are other ways to raise money than just oil. And the whole thing about the Vision 2030 is transitioning away from the sole dependence on oil for its revenues. And they're really doing that. They're really going I've just come back from Saudi. They're really working on that very hard.
That alliance, of course, between Riyadh and Abu Dhabi it feels like strengthening after a little bit of division that we've seen in previous years. I'm curious, though, about the non-OPEC supply from the likes of Russia, Iran, et cetera. Where does that fall into the equation?
Well, that's very interesting. And, there are the baselines, right? And you look at UAE, who have, a lot of spare capacity, but Saudi also has a lot of spare capacity. But then you look, Iran can produce quite a bit. You look at Libya, who can produce quite a bit. Nigeria, who used to produce 400,000 barrels more than they're producing today. Russia having a new field coming on stream, which would be 2 million barrels a day. So there is pressure there. But it's a very tricky thing to rebase or rebalance the quotas. Last time that happened was with the African producers last June at the meeting, and that caused quite a bit of upset and led also to Angola leaving.
All right. Cornelia Meyer, Chairman and Chief Economist at LBV Asset Management. We could go all day with her. We thank her so much for walking us through a story that we will be monitoring, of course, on Sunday. I do want to bring back our top story overnight, though. Donald Trump has been found guilty in the first criminal trial of a former U.S. president in the nation's history. A New York jury convicted him on all 34 counts in his hush money trial. Manhattan District Attorney Alvin Bragg, who brought the case against Trump, spoke after the verdict was handed down.
While this defendant may be unlike any other in American history, we arrived at this trial and ultimately today at this verdict in the same manner as every other case that comes through the courtroom doors, by following the facts and the law and doing so without fear or favor.
Alvin Bragg there on the heels of that verdict. Lizzie, I think what's so striking to me as the American in the room is that it feels like this was largely expected for a lot of the American voter base. But then, I walked out of my apartment this morning and the shock from the international community that this had happened was surprising.
I've got to say, that's got to be the title of your show, The American in the Room.
I'm working hard to get it rebranded to that.
I am shocked by this as a European, as a Brit. I'm shocked that I was listening to coverage last night saying that they'd be stunned if anything changed in terms of Republican support for Trump. It's what I come back to when I ask you about the swing voters. Surely they would be surprised by this, but even the market seemingly not surprised by this when we were talking to Ben Guttridge about it.
Yeah, and we should also add that this is not his most kind of consequential case in terms of the effect it's going to have on his presidential campaign. We had Kevin Whitelaw at the top of the show talking about the fact that even this felony conviction, yes, that is a loaded term, of course, but it is still only a state felony conviction. It is the lowest level. He's still dealing with potential convictions of treason that would effectually affect his presidential campaign in the likes of Washington, Georgia, Florida, his role in the riots of 2021 or lack thereof, his role in terms of moving classified documents from the White House to Mar-a-Lago, his estate in Florida as well. That would have, in theory, a bigger effect in terms of even his candidacy. And already you can see that this is getting pushed back further and further because they're having the same issue in terms of the court cases and the legal system in the states that they're having at the Federal Reserve, is that the closer you get to the election, and I'm sure the BOE is having this as well, the less you can really do because of how much it affects voter turnout. And ironically, that was the exact point of this entire case. It wasn't the fact that it was a hush money payment. It was a hush money payment at a time that could affect voter turnout and voter opinion ahead of the 2016 race.
Yeah, none of the officials wanting to get their hands dirty by looking like they're tarnishing themselves, getting involved in the politics affecting the voter turnout. Yeah, really interesting stuff, even though you still got Elon Musk and the likes of Steve Schwarzman, Bill Ackman expected to endorse Donald Trump. Seem to be running out of options for who to back at this point. But we will keep across the Trump story for you. But we'll turn to some more drama next in politics because we're looking to South Africa. The projections showing that the ruling ANC could lose its majority, a historic loss, and be forced to partner with rivals. So we'll go to Jennifer Zabasajja in South Africa next. This is Bloomberg.
The linear business is not going anywhere. The sports business is moving is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one of the players want to be in it because of the audience. We have two assets in the sports business that are year-long, don't have a season. I don't believe prices are going down. Throughout the bifurcation of the rights. In the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
They can be seen everywhere, in airports, patrolling beaches and parks, in rural areas and city streets.
Mexico's military is now the largest and most powerful.
Of Andrés Manuel López Obrador, over 100 different functions of civilian governments or civilian authorities were transferred to the armed forces.
Since López Obrador came to power in 2018, the combined budgets of the armed forces grew by 150%. But as the new government takes over, citizens are wondering if these infrastructure works are coming at the expense of public safety.
What we are having now is the worst rate of murders in our history.
Widely known as AMLO, President López Obrador's tenure has seen record-high homicides.
What we are having in Mexico is a strong process of militarization of the public life. The armed forces, they are playing a stronger role, not only in matters related to security, but also in infrastructure, building trains, airports.
Una institución como el Ejército o la Marina son mucho más rápidos, dan por su naturaleza y su formación resultados en construcción mucho más ágiles.
Mexico's next president will have to reckon with what López Obrador created. A richer, mightier, and larger military that's more deeply ingrained in private business and government than it's ever been.
Bloomberg senior reporter Andrea Navarro there on Mexico's militarization under AMLO. This weekend, of course, Mexico will choose a new leader in the largest election in the country's history. This is a massive deal, Lizzie, because AMLO right now has a 60% approval rating. That is more than any world leader anywhere that you can imagine, of course, because of term limits. He isn't able to go for another term. To me, the market reaction is crucial here because as we talk about this conversation we had with Ben Gutteridge, for example, is where do you find the yield in this market? EM serves as that. The geopolitical risk is offering that juicy yield. And you can see that in some of these Mexican assets. So many people, at least in the States, go to the Mexican peso or the Brazilian real for that yield. That carry trade with the Japanese yen on one end and the Brazilian real, the Mexican peso on the other has been fairly lucrative as people kind of wait for the Fed to figure out where they're going to go next. It's a similar dynamic in South Africa where, again, because of some of the geopolitical risk there as well, their assets have actually proven to be a little bit of an extra cherry on top in portfolios.
And yet we saw the rand take an absolute beating off the back of the political results, the uncertainty over what shape the coalition is going to take there. And we can go to Jennifer Sabasaja in South Africa now for an update on what the politics is going to shake out to be. As I say, the rand dropping more than 2% yesterday after projections of election results showed the ruling ANC falling well short of a parliamentary majority and leaving it really looking to seek a coalition just to cling on to power. So, Jen, you're with us at the results centre in Midrand. Just over half of votes have now been counted. How's it looking? What shape of coalition is likely? How long could it take to get one?
Yeah, I mean, Lizzie, right now, if we take a look at what we actually have, and we just got the bell behind me is just an indication that more votes are coming in. We're just above 55% of voting districts that are counted, about 7.7 million votes. And yes, as you mentioned, this could be a historic election for the ruling African National Congress, potentially them falling well below that 50% majority that they were hoping for. And the second biggest part of the story that has happened thus far is just how surprisingly well former President Jacob Zuma's MK party is doing. Now, I want to make sure to remind people that it's only been around for just about 6 months, but we're seeing the MK party really outperform in some places that have traditionally been ANC strongholds. But yes, I mentioned we're just about 55% of the votes, voting districts that are tallied. And so we still have a bit of a ways to go. We still have some more populous parts of the country to go. But many people are discussing, you know, what does this potentially new era of coalition governments and agreements look like with the ruling party?
Well, Jennifer, walk us through that as well when it comes to the market reaction. Lizzie was talking about that weakness you're seeing in the rand. Markets never like change, and nevertheless, a change that's coming after 30 years in power. Walk us through how these markets might shake out.
Yeah. Right, Kriti, and I think just that reaction is really important to note because going into this election, many investors, it was not really the base case scenario that we were potentially going to see some of these smaller parties doing it as well as they were. There was, we did a Bloomberg survey, and many investors were hoping for policy continuity, but potentially looking at the ruling African National Congress with an opposition party like the DA, which is seen as more market-friendly, business-friendly. But just seeing how we saw the RAND perform, we also saw government bonds weaken, the benchmark stock index weakening just a bit. Potentially then, investors are getting a little bit jittery about what this coalition could potentially look like and what does that mean for economic policy. And in particular, if we do see the ruling ANC teaming up or going into a coalition agreement with a party like the EFF, which is led by Julius Malema, a leftist party, more populist, or even the MK party, what could that mean for policy moving forward? So clearly the market reaction is an indication of where potentially investor sentiment is.
But focus shifts to the U.S. later today at 1:30 p.m. U.S. time, UK time, PCE data as well. At the same time, we get those Canadian GDP figures as well. But really all eyes on that PCE deflator story, as well as that positioning ahead of the geopolitical risk, because it's not just the elections we're going to be keeping an eye on, but that OPEC meeting as well. It feels like right now markets may just be a little bit sleepy, waiting for that PCE deflator story. That's going to come again at about 8:30 a.m. New York time. It's about 1:30 p.m. right here in the UK. Let's bring in Justina Lee, our star markets reporter. We've been relying on you pretty heavily this week. Justina, this PCE deflator, it feels like it's been the event of the week on the macro front. What do we expect? How do we position?
Oh, yeah, for sure, definitely. I mean, if we look at what markets are currently expecting, I mean, economists are projecting generally good numbers when it comes to the disinflationary story. They're expecting a slowdown in personal income and personal spending, and also, most importantly, in that core kind of PCE deflator number, they're expecting the slowest increase so far this year. So I think generally everything is expected to point to a good trend, even if it's not entirely enough, I think, for Fed officials to kind of be comfortable with the trend right now. I mean, speaking of the lack of movement, we had that China data earlier, and even though you saw this surprise hit to the growth outlook, stocks holding up. I mean, how do we factor this in? We've been talking about the China factor in so many different stories. It kind of brings us back to Trump, Kriti, because you've got the US and the EU, of course, accusing Beijing of the excess supply capacity, the excess capacity. So China manufacturers having more risk in the pipeline, depending on how strict the new trade barriers will be under Donald Trump. My point really is just why stocks are not reacting more, and I suppose the answer surely must be that they want stimulus from the government. Yeah, for sure, and it's interesting because the government kind of has been telling Chinese bond traders, maybe don't just pile into those bonds, but still we're kind of seeing Chinese bond yields fall, which has been kind of in an opposite direction with kind of the rest of the world, and I think it does kind of speak to kind of the very different economic trends there and kind of the expectations for monetary easing, and of course that's going to have grave implications for the Chinese yuan.
So in terms of this trade here, we're starting to see a lot of Fed speak, of course, real division just in the last 24 hours between Williams and Logan as well. One saying policy is restrictive, the other saying it's not restrictive enough. What do you do with this bond market? I mean, how high do yields rally?
Yeah, it's really confusing because one point of kind of contention here is the R star, right? What is the neutral rate of interest where monetary policy is sort of not contracting or growing the economy? And that actually is not that scientific. There are many different models giving you different answers. But I think one thing that kind of Fed official Logan kind of pointed to here is that maybe that neutral rate of interest has risen.
All right, Bloomberg's Justina Lee walking us through really how we're supposed to walk through all this Fed speak, the market drama, and of course, as Lizzie pointed out, the read-through coming in from China. We thank you so much for bringing that crucial story into context for us. In the meantime, as we watch those slew of things going on this weekend, we've got to keep an eye on what's starting on Monday. We don't want to miss our conversation from the IATA annual general meeting. We've got a slew of great guests. Guy Johnson is out on location we're going to hear from really the heads of all the major airlines around the world about the capacity restraints, the demand, and whether or not they can really rally in the face of this macro environment. More ahead. This is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg. And market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Donald Trump is found guilty in the first criminal trial of a former U.S. president in the country's history. It could reshape the political landscape 5 months before Election Day. Well, French inflation accelerated for the first time this year, mirroring trends elsewhere in the region and coming just as the European Central Bank prepares to lower rates. And NATO foreign ministers meet in Prague as President Biden allows Ukraine to use U.S. weapons to hit military targets inside a limited area of Russia. So there is a lot going on, not only in politics, geopolitics, but of course, the world of markets. Quite a lot going on in terms of data that we're expecting a little bit later in the U.S., but we also had a data print, of course, in France that could make a difference to how bonds position future cuts from the ECB after loss next week. Now, stocks are trading a little bit mixed. Again, we have quite a lot of key inflation prints. In fact, this afternoon in the U.S., it's the Fed's preferred price growth measure, and a lot of traders will look through that to see for hints on the scope and timing of policy easing. This is a core PCE deflator, and it's likely moderated in April to the slowest month pace yet this year. Now, stocks gains this month have actually been fueled by a rally in tech, as well as the Fed Chair Jay Powell's dovish posture on rates at the start of May, so that could change. You can see S&P futures down 0.2%, European stocks practically unchanged. So onto politics, and Donald Trump has been found guilty in the first criminal trial of a former U.S. president in the nation's history. A New York jury convicted him on all 34 counts in his hush money case. Now, Trump, who faces as many as 4 years in prison, insisted the trial was rigged.
This was a disgrace. This was a rigged trial by a conflicted judge who was corrupt. It's a rigged trial, a disgrace. They wouldn't give us a venue change. We were at 5% or 6% in this district, in this area. This was a rigged, disgraceful trial. But the real verdict is going to be November 5th by the people.
Let's get more on this with Tina Fordham, founder and geopolitical strategist at Fordham Global Foresight. Tina, it was pretty incredible, actually, to watch. This is the first time that we have a presidential hopeful that's a convicted felon. Your first reaction?
Well, it was astonishing to watch. I mean, that response from President Trump on the courthouse steps, the clip that you showed didn't include the part where he said that mental patients were flooding across the border. It was a fairly unhinged rant, but it seems to confirm the idea that Trump did not expect to be convicted, let alone on all 34 felony charges. So even as much as we've kind of normalized the number of trials and the charges against former President Trump, it's still another thing to hear those words read out loud. And I think that it will be giving his backers pause for thought.
I was going to ask you, how do you think voters will react, actually, to this verdict?
Well, if we look at the polls that were posing this question, would you still vote for Donald Trump if he was convicted of a criminal charge versus a civil charge? He's been convicted of many civil charges. The latest polls, Marist and Quinnipiac, suggested 6 or 7 point potential drop. That doesn't sound like much. There will be those who say, is that it? But in a tight race, and this has been a very close race so far within the margin of error, the two candidates are polling very close together, that kind of fall would be meaningful. But it is way too early to tell. We need to see fresh polling data taken after these charges have been announced.
So, Tina, how likely is that going to actually play out in the next couple of months? Again, we know that Donald Trump is facing 3 other criminal trials, but this is likely the only trial that he'll face before the November election.
And that's important. So if we think about the news cycle and the timing, the signposts, the sentencing for these charges will take place on July 11th. The Republican Party convention will take place in Milwaukee starting on the 14th. I think that Trump will get probably a fine or a penalty, won't see jail time for these charges, and that's going to be significant. I think the judge's sentencing on the matter will have a lot to do with the trajectory. But for most, at least global investors, judging by the questions flooding into me, what they're asking is, will Trump still be the nominee? Answer, yes. Can he still run and win? Answer, also yes. As you said, the other trials are scheduled for later. So Trump's best hope is to push out all of these decisions until after November 5th.
But as you say, that Trump is potentially facing prison, or he could actually have a probationary term. Does what happened and what's decided on July 11th change voters' mind?
So that's what we need the new polling data to confirm. One of the things that is pretty clear, though, is that people who support Trump are most likely to continue to support him. But let's also remember the wild card factor in this election, and this is something I've written about a lot. Do independents, for example, throw their support behind RFK Jr.? Do people not turn up at the polls? When you've only got a few percentage points in it, these variables really matter. So I don't think we're going to see a big swing away from Donald Trump, to be clear. But we're going to be looking much more closely at these. Yeah.
Yeah, no, and just, to make it clear, I mean, he could legally, of course, campaign even behind bars. Does the Republican Party stick with him?
So I think that they will, because it's very late in the game. And, judging by, again, the anecdotal things I've been told, the RNC fundraising sites crashed last night with traffic, with donors coming in. So his supporters will stand by their man. It's the others in the middle who haven't made up their minds. And then when it comes to his very high-profile supporters, thinking of Bloomberg viewers, Steve Schwartzman, Bill Ackman, these people who've recently come out in support of Trump, this conviction, I think, raises the reputational risk for people like that in the financial services industry for supporting a convicted felon. But I don't think it'll stop them from doing it.
Why do you think not, Tina? Because there does seem to be, when you speak to a lot of Wall Street titans, they in their mind they put some of the question marks over Trump's personality in one category, but focus on what he do with the economy. Is that the right way of thinking about it? And how far is too far?
I think we've seen a remarkable ability for people in our industry and people in the American political establishment to ignore the less salubrious aspects of President Trump's personality, and this conviction, I think, will come under those same sort of set of rationale, because if he doesn't do jail time, which I don't think is likely, if the other criminal trials are happening afterwards, it will be a question of seeing what happens later. The Biden campaign has tried to exercise restraint in its remarks, and to talk about focusing on the president's record, President Biden's record in the economy and everything else. But again, the number of variables, the number of wild cards makes this race the hardest to predict or forecast in any of the 5 that I've been following professionally.
Tina, why do you think he won't do jail time? I guess there are security hurdles of imprisoning a former president, but also if he does go to jail, does that split American society?
Well, so let's look at the charges. These are white-collar charges. President Trump has not had a previous criminal conviction. They're fairly low level. So with that in mind, although the judge could opt for sentencing that would include jail time, my strong sense is that he won't want to go for that. Even a suspended sentence, I think, seems extreme. These are hush money charges, after all. They fall into the moral turpitude category. The other trials coming up could have a greater chance of jail time, but again, they're happening later. And what we've seen, the Trump approach has been, over years now, is to play for time, to kick the can down the road and deal with things as they come up. This is a setback for the president. I think where we are outside of the United States, it feels more dramatic to us than I think it does to Americans.
Tina, thank you so much. Tina Fordham, their founder and geopolitical strategist at Fordham Global Foresight. Coming up, division at the Federal Reserve. John Williams says policy is restrictive, while Lori Logan says it's not enough. We'll dive into the thinking ahead of the PCE deflator later today. That's next, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Well, Dell's first revenue increase since 2022 was not enough to impress investors with high expectations for the company's AI server business. Now, the stock has more than tripled in the past 12 months on AI excitement. You can see today Dell down some 14.1%. Now, investors are looking ahead to the release of the Fed's favorite price gauge. That's the core PCI deflator. We all have a favorite gauge for more clues on the path for interest rates. Now, we're joined by Madison Fowler, a global investment strategist at JP Morgan Private Bank, also with us, Bloomberg's Justina Lee. We do all have a favorite indicator, but this is actually a big one because it's all been so confusing in terms of what inflation goes next. Madison, what are you expecting?
I think it's important to look at inflation in terms of its different subcomponents, and I think there's been certainly a very promising trend when we saw the CPI print a few weeks ago, a bit of softening there. But I think what investors are still very concerned about is what happens with shelter inflation and what happens with labor market-driven inflation, so specifically that core services ex-shelter component. I think we're continuing to see promising dynamics from a leading indicator perspective, but what I think is causing some consternation is at what point in time do those leading indicators really start to filter through the data? So do you see the real-time rent measures start to flow through into the official shelter data? And do you see this dramatic rebalancing of the labor market that we've seen flow through into those softer wage numbers and flow through into those softer core services items?
Yeah, I mean, there's so much to actually unpack, Justina. What do you expect, I guess, market price? I mean, there's two things. It's what we're seeing in that kind of like inflation, breakdown, and then it's what the market interprets, which is not always the same thing.
Yeah, I think so far, if we look at what economists are projecting, they're overall expecting these numbers to give kind of policymakers a bit of comfort, a slowdown in personal spending, income, and then like what we call like the core PCE deflator, which is expected to be the slowest so far this year. But I think in terms of market reactions, I think people are kind of happy to see any signs of disinflation. But in terms of like numbers to give Fed enough comfort to really move towards a cut, I think it's really still too early to talk about that.
What happens in all of this, Madison? I mean, do you still look at dollar or do you just look at treasuries?
I think you certainly need to look at both in terms of the market reaction, and certainly you also need to look at the equity market reaction as well. One thing that I think we've certainly learned this corporate earnings season is that inflation between 2 to 3% tends to be a bit of a sweet spot for stocks, in the sense that when we've seen historically headline CPI between 2 to 3%, that has tended to signal a one-year forward return for the S&P 500 around 15%. Similarly, when you see inflation below 3%, that tends to mean that equity valuations remain quite supportive. And so I think as long as we see a movement towards that direction, and that signals to us that the Fed is on hold but not reconsidering rate hikes, I think that this should hopefully be a comforting print for investors.
But I guess if you see this like global divergence, does it mean that there are opportunities but also a lot of volatility? The gravitational pull of the Fed, and I know there are various economies in different cycles, but it's still quite strong.
I agree. I think, we certainly are seeing a fair bit of global divergence when it comes to moving towards that path of rate cuts. So it's very different than the very coordinated global tightening that we saw throughout the course of 2022. And with that, certainly, I think opens up a number of opportunities in different markets. And so in the past, where it might have been much more of a story of U.S. exceptionalism, I think that there are certainly opportunities to leg into European markets, to leg into Japanese markets, just given this divergence that we're seeing across the globe.
And Justina, I guess the thing that's changed in the last 4 to 5 weeks is that also there's been measures of growth that have slowed in the U.S. And so when they cut, it's unclear what kind of economy they'll have.
Yeah, exactly. And I think it's kind of interesting because we've seen some signs of slowdown, but maybe inflation still remaining sticky. So that kind of raises a question of whether a lot of these drivers, for housing, and for instance, isn't entirely just about demand. A lot of it is about kind of structural supply issues. But kind of another interesting debate is we've kind of heard a lot of Fed officials say, oh, maybe trends are so different now that the interest rate you need to kind of slow down inflation has actually shifted higher. And we've kind of seen kind of a split among Fed officials lately around that debate.
Madison, when you look at this kind of, again, this divergence we're expecting, or it's been telegraphed quite significantly, that the ECB cuts next week. But then we had that inflation print in France that's been higher than expected.
Yeah, I think it's something we need to keep in mind. I don't think that 1 month of data is going to deter ECB policymakers from pursuing that first rate cut next week. So I do think they go ahead with that, especially as so many of the ECB speakers have signaled that they feel quite confident in that path of inflation. That said, I think once we see a June rate cut, there is a debate and a conversation to be had around what that forward path from there looks like. It is possible we could need to wait a number of months before we see that, second or third cut from the ECB, given that really delicate balance between growth and inflation that really all central banks are dealing with right now.
Thank you both for joining us. Justina Lee and Madison Fowler from JP Morgan Private Bank. Both stay with us. Now we dive a little bit more into the euro area CPI data due out later today. That's next, and this is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Or other authorities.
Could face bigger challenges next.
It was going to keep reading World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Well, still with us to talk markets, Madison Fowler, Global Investment Strategist at JP Morgan Private Bank, and Bloomberg's Justina Lee. So thank you both for staying with us. Madison, when you look at what we've heard from ECB in terms of policy, but also just the strength of equities and the valuations, the difference between AI in the U.S. and what we've seen in Europe, where do you find the best value?
It's a great point. I think when it comes to U.S. versus Europe from a regional standpoint, I don't know if there's really a need to express a preference for either. I think we're looking at really strong upside return potential for both markets at this point, and for different reasons. But ultimately, I think it comes down to the fundamental corporate earnings strength that we continue to see. If we narrow in on Europe in particular, we continue to really focus in what we refer to as European national champions, which are multinational companies based in Europe, but are really leaders of their own industries. And those types of companies who are leaders across, AI and semiconductors, across luxury, across, weight loss drugs. We've seen, I think, tremendous growth and pricing power from those companies. And it's really been those firms that are leading Europe out of the earnings contraction that we've experienced over the last few quarters, and really just in these nascent stages of earnings growth recovery today.
And what do you do with UK assets?
UK assets, I think, it's a little bit more of a nimble story. So I think certainly in the UK, you have a different makeup of its market. It doesn't tend, to be as, heavily focused towards technology, for instance, as, the US is. You have, a fair degree of higher exposure to China. There is, I think, a sense of perhaps feeling a little bit more neutral on UK equities, given that China is stabilizing, given that we're talking about Bank of England rate cuts. But I do think with the UK, it's very much about where you focus. And I think in particular, we really want to hone in on those quality companies, and especially some of those dividend payers, given that the UK offers one of the highest dividend yields globally.
And just, what do we do with China right now? We haven't quite seen the stimulus that we were expecting from them, and there's a bit of a slowdown in certain parts.
Yeah, data today was pretty disappointing in that it kind of showed the manufacturing PMI tipping back to contractionary territory. And this is already amid kind of a barrage of news, right, about kind of trade protectionism and kind of the EU and the US kind of restricting trade with China. And so I think that's definitely painting a pretty negative picture. And you're really seeing that play out in the Chinese bond market, even though we've kind of heard a lot of warnings from the government about how you shouldn't just pile into bonds. They're kind of worried about the bond buying frenzy here. But the fact that it's still happening kind of shows sort of the pessimism about growth and kind of people really waiting for more stimulus there.
So what does that mean? The play, I guess, is what will it take for policymakers to step in and give more?
Yeah, exactly. But they're really kind of in a tough spot here because, we've been talking about how the Fed is not comfortable to cut just yet, right? And so if kind of China does aggressively ease a bit more, it could put more pressure on the yuan and on capital outflows. And that's something that they're definitely watching.
What's your take on China, or how do you play China?
I tend to agree with that. I think when we saw the rally, coming into this year quite strongly, it was one that we thought was fueled more by some technical positioning and not necessarily around enthusiasm around the growth picture or on the potential policy response. So we've had more of a cautious stance when it comes to that. And to get a little bit more excited from a broad perspective, I think you'd really need to see more of that policy impetus, or at least, the combined effort of those piecemeal efforts starting to really come through, even though you are seeing a sense of stability. That said, for a longer-term investor that wants exposure to some of these more exciting secular growth trends, we do like the onshore market within China.
Okay, thank you both for joining us. Our Justina Lee and Madison Fowler, they're from JP Morgan Private Bank. Plenty more to come on markets, but also on elections. This is Bloomberg.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg. Top experts. Great questions.
Donald Trump is found guilty in the first criminal trial of a former U.S. president in the country's history. It could reshape the political landscape 5 months before Election Day. French inflation accelerated for the first time this year, mirroring trends elsewhere in the region and coming just as the European Central Bank prepares to lower rates. And NATO foreign ministers meet in Prague as President Biden allows Ukraine to use U.S. weapons to hit military targets inside a limited area of Russia. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the EU heads to the polls next week for elections to the European Parliament, with some candidates warning far-right parties could make significant inroads. Now, joining us now from Paris is MEP Sandro Gozzi. He is co-lead candidate for Renew Europe group. Mr. Gozzi, thank you so much for joining us. What do you think is at stake for these elections?
Well, the future of Europe, this election is the most important election since 1979, because the scale of challenges we are facing, they are the same of those who were faced when we invented Europe. We got the war in the continent, in the Middle East. We are challenged by aggressive empires like China, like Russia. It is clear that we need a deep reform and a shift in the European policy. So all these issues are at stake in these very important European elections, I repeat.
There's a lot of focus in the election about the vote and the share of vote for the far right. Are you worried about a shift rightwards for Europe? And will then that translate into domestic policies?
Well, no, I'm not worried, because I don't do politics being worried. I'm determined to fight against the extreme right, because they do not have any project for Europe but destroying Europe. They want to weaken Europe from inside, and it is clear that to weaken Europe from inside is a very bad news also for the member state. So we must fight against the populists. They are not. They are scared to talk about Frexit or Italexit. They don't talk about exiting the Union anymore. But their project is conceived to block the European Union. It's exactly the opposite of what we need. We need to strengthen the European power and the European sovereignty. So it is clear that it is going to be a hard fight against them till the 9th of June. Then they are very divided among themselves. They cannot agree on anything on Europe, because each of them say Italy first, France first, Spain first. If you say every time Spain, Italy or France first, Europe come last.
But in France specifically, the National Rally is expected to come first by a pretty long way. So what does this mean for the Macron government?
Well, you know, they are always very high in the opinion polls, and they are lower in the real polls, in the votes. So, I mean, now we are focusing on further Europeanizing this campaign. This campaign is still focused too much on domestic issues, whereas we have to decide about the future of Europe. Bardella and Le Pen wants to have a revanche of 2022. Glucksmann wants to make us forget that he was the ally of the extreme left. We got 10 days to put at the center of the debate the real European issues, and we will see in the evening of the 9th of June what the real votes are and what the balances of power are.
So how can the EU actually address its defense challenge? Do you think there will be some joint debt?
There must be. This is our proposal. We propose a 100 billion euro to develop the defense industry, and we want to finance this plan for the defense industry with Eurobond. It is a strong proposal by Emmanuel Macron, by Kaja Kallas, by the Renew Europe Commissioner Thierry Breton, and we think that this must be the highest priority in the new term, and we think that the success in the functioning of the Next Generation EU, of the European Recovery Plan, shows the way ahead, and we must go along that way.
So is Europe taking the right approach to China?
I think that we have started in the last term to take the right approach to China. China has been very aggressive. China violates the World Trade Organization rules. China has made some predatory investment in Europe. We start to work around the principle of reciprocity. We start to screen the investment from China. We start also to respond to unfair foreign subsidies for Chinese companies. I think that, of course, China is a big reality, is a big economic and trade reality, but we must give ourselves the means to come back to a fair trade. With China today, the trade is unfair. We are in favor of free trade, but we want also a level playing field which is respected by the two parties, and the Chinese are not respecting many of this.
Can you also talk to me about how you see the green transition, and whether you think the EU should actually pick up spending for the EU transition, maybe even rival some of the Spending and Inflation Reduction Act in the US?
Well, I think that the green transition is a fundamental industrial and societal choice. There is no time for green fatigue or green backlash. We have elaborated the strategic policy and legislative framework. Now, as you rightly were pointing out, we have to focus on the resources. Already 1/3 of the recovery plan of the Next Generation EU is devoted to the green transition. We have to continue also to create own resources, new own resources for the European Union, like we have done with the carbon mechanism at the external borders of the Union, or with the reform of the emission trading schemes. And we have also to go beyond the 1% dogma. You know that the budget of the European Union is still only 1% of the global European wealth. It is a budget which has been conceived in 1988. I cannot even remember what I was doing. I think I was at the high school. Before the fall of the Berlin Wall, we have to fundamentally reform the European budget for the green transition, for the technological innovation, and for defense.
Sandro Gozzi, thank you so much for joining us. Of course, he's MEP co-lead candidate for the Renew Europe group there on his thoughts on the EU elections coming up from June 6th to June 9th. Now, the South African rand has dropped more than 2% yesterday after projections of election results showed the ruling ANC falling well short of parliamentary majority, leaving it to seek a coalition to retain power. Well, Bloomberg's Jennifer Zabazaja is at the National Results Center in Midrand. Thank you, Jen, for joining us and for some great reporting throughout the week. So just over 51% of the votes have now been counted. How's it looking?
Right, Fran. We're at just over 57% of the vote, about 8 million votes that have been counted. And as you mentioned, this is looking and it's tracking like the ANC is going to fall well short of that 50% threshold that they were hoping for to retain that parliamentary majority. And really the second half of this story that we're all following closely here is just how well former President Jacob Zuma's MK party is doing. And really at the expense of the ANC, we are seeing the MK party right right now, tracking as the third biggest party here in South Africa, behind the ANC and the Democratic Alliance, the main opposition party. So now the question is, what do some of these other more populous districts throughout the country look like, in particular here in Gauteng, which is, of course, home to Johannesburg, the economic hub here in South Africa. Potentially, the ANC could claw back some votes there, but most of the projections that we're looking at is seeing that potentially the ANC is going to, for the first time in 30 years, fall well below that 50%, potentially looking at even 40 to 42%.
Jen, thanks so much. Jennifer Zabazaja there with the very latest, of course, on South Africa. Now, coming up, President Joe Biden allows Ukraine to use U.S. weapons to hit targets inside Russia. That story is next, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Now, the conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. President Biden will allow Ukraine to launch U.S.-provided munitions against military targets inside a limited area of Russia. Now, the decision marks a significant shift from the White House, which had earlier resisted calls from allies. Now, for the latest on the ground in Ukraine and Western support, let's bring in Bloomberg's Mark Champion. Mark, I mean, this seems like a very significant development. What do you make of it?
Well, it's been a long time coming. I think there are a few things to say. The first of all is Ukraine has been hitting Russian targets, within Russia for quite some time. They were limited as to what they could use. And the Americans have now said within a certain area, as you mentioned, across the border from Kharkiv, they can now use U.S. weapons. But the U.S. has also limited what the range of the weapons that they can use. So they can use HIMARS, but not ATACMS, for example, which, again, I think, will be welcomed in Kiev, but it's not entirely clear it makes a huge amount of sense because essentially what will happen is that the Russians will, pull their artillery back or their missile launchers back. Out of range of HIMARS. So, we'll probably be back here having a similar discussion again.
But Mark, it feels like a significant escalation in tone.
Well, it is, but it's. I would see it. I would put it more as another step in what has been a very incremental process from only providing javelins back at the beginning of 2002, anti-tank weapons, and saying absolutely not to tanks, to aircraft, to long-range weapons or artillery, and then step by step. Moving through all of those taboos, and this is really just the latest taboo to be broken.
Mark, I mean, we're focusing so much, of course, on what's happening in the Middle East. Is Vladimir Putin taking advantage? There were a number of reshuffles or appointments also under the guard and very close to him. What do you think? Does that change as the world is distracted elsewhere? Does that change on how Ukraine is doing?
No. So Ukraine will always be Putin's number one priority. In fact, his number one, number two, number three. So Gaza, I think, is extremely useful to him in distracting Western attention, in stretching U.S. Defense capabilities in the sense that it also needs to supply Israel. And so it's very useful to Putin, but his priority is absolutely Ukraine. And so it's, there's no upside for Ukraine in the sense of what's going on in Gaza, unfortunately.
Mark, is a ceasefire between Israel and Hamas much further ahead? I know there's been international pressure. You wrote a column saying, look, Israel will always be held to a different standard. And yet more world leaders are really asking for things to de-escalate, especially in Rafah. Where do you see this going in the coming weeks?
Well, I think the tension is becoming very, really intense. So there's an immense tension between, Benjamin Netanyahu's determination to see it through in his campaign as he sees it in Gaza. You had an Israeli general the other day saying, we think it'll take us another 8 months to finish off Hamas in Gaza. But the tension, the sort of pressure that's building on Israel to stop and to accept a ceasefire, to get a deal, to get the hostages out. Domestically, there's a lot of pressure building on the hostages, and abroad, and a lot of pressure building on, just getting the fighting to stop and the civilian casualties to stop. So I don't know, how long that tension can sustain and what will give at what point, but it is really becoming very intense right now.
Mark, thank you so much for all of that analysis. Mark Champion there from Bloomberg Opinion. Meanwhile, Russian gains in Ukraine are fueling fears about Moscow's intentions, particularly in the Baltic region. Now, Bloomberg Markets Asia anchor Haslinda Amin is at this year's Shangri-La Dialogue in Singapore and spoke with the Lithuanian Prime Minister Ingrida Šimonytė on EU support to Ukraine.
We see that the determination of the country and of the nation to fight back for its sovereignty and territorial integrity is there. It was there despite of the doubts and problems we were having on our part with provision of particular weapons or further support, with debates in Congress about the support package for Ukraine that finally was adopted. So we know this is there. So what we need to do, we need to provide Ukraine with all the help that we can. And on the other side, we need to reduce the capacities of Russia to continue the war with sanctions, with restrictions to gain money from the democratic world to finance this brutal war in Ukraine.
You talk about how you need to give the assistance that Ukraine needs. Quantify that for us. Who should it come from? Are you talking about what the U.S. can possibly do?
Well, the level of support so far, the military support, differentiates very much across the countries. For example, for Lithuania, this is a number that ranks 1% of GDP, I think. But you can imagine that we are a small country, so even 1% of GDP for us is not a huge number in terms of actual nominal value of the support. Then when we compare what other countries are doing in terms of their capacity, so in terms of their GDPs, the ratios would be significantly lower. So there were different calculations saying that if everybody is providing at least 0.25 or 0.5% of their GDP in the democratic world, then that would do a very big difference to what it is there. Because now it looks like smaller countries tend, of course, and this is natural because the ratio, it is a ratio that is calculated based on the value of ammunition or weapons to the country's GDP. In terms of the volumes, of course, US and Germany are providing big amounts of the support, but I think each and every country can do more. Sincerely, just look at what is doable and do more.
Lithuania is mulling training troops on the ground. What's the thinking behind that? Is it something that Ukraine has asked for?
Well, this is a long-standing exercise where we train the Ukrainian soldiers. We've trained them before this invasion, and this is a long-lasting cooperation between our military forces and Ukrainian military forces. And we train them in the third countries. We train them in Lithuania. If need may be, we would train them also in Ukraine in partnership with other countries who would be willing to do so.
At this point in time, how are you assessing the prospects of a win for Ukraine?
Again, it depends, I think, largely on us. The
war has gone on way longer than people anticipated. We're into the third year.
Yeah, because along the way, we are in the third year of this invasion. Along the way, there were more than needed episodes of hesitation in democratic world about whether we can provide, whether Ukraine can withstand this. We were never in doubt. We were always certain that Ukraine will fight back, and all that we need to do is to provide Ukraine with all the support that is there.
That was Hezlin Emin there with the Lithuanian Prime Minister. Now, coming up, OPEC Plus is said to be working on a deal ahead of the group's meeting this weekend. So we'll bring you all of the latest details next. And this is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Now, OPEC Plus delegates have told us the group is moving closer to an agreement on oil production cuts that may actually stretch into 2025. Now, let's get more on the story ahead of Sunday's meetings with Bloomberg's Jumana Bersace in Dubai. Jumana, a lot of focus, of course, on oil demand, and some of the spare capacity that OPEC Plus has. What are we expecting for this weekend?
Good morning, Fran. That's right. So I think the big surprise here is that Bloomberg is reporting that they may be looking at extending those production curbs to 2025. The market was pricing in an extension perhaps until the end of the year. But I think what's important to note here is that this is a reflection of how OPEC Plus producers are looking at the demand and the supply outlook for the remainder of the year. You talked to a couple of factors there, namely spare capacity. There are many producers within OPEC who are still sitting on plenty of capacity, the likes of Kingdom of Saudi Arabia, UAE, no way near producing at full capacity. So that extra capacity is going to act as a buffer. They're also keeping an eye on non-OPEC supply. You look at how much production is coming out of the U.S. U.S. inventory is sitting at the highest level since last July, production coming out of Canada, Norway, even Guyana, bringing on new oil fields on stream. All of that is impacting the supply outlook. From the demand perspective as well, you've got to bear in mind that even though the IEA are still penciling in oil demand growth to continue, it is at a slower pace than what they were anticipating 1 year ago. And you've got to think there that Asia and perhaps the demand from China is impacting. And then finally, Francine, you also need to take into consideration compliance within OPEC, because there are many countries who are not actually adhering to these voluntary cut targets. And depending on whose data that you look at, they are overproducing by the tune of 500 to 800,000 barrels per day. So it's all very fine and well for them to say that they're sticking to these voluntary cuts of 2.2 million. But in reality, compliance has been quite low, which means there has been more supply coming to the market than OPEC would like to see, and probably one motivation for them to extend these cuts to the end of the year.
So, Jumana, when you say, and this is exactly what analysts are telling us, that the group is widely expected to extend these so-called voluntary curbs, and when you look at the complex of the members of OPEC, is there anyone that would benefit? Of course, if you have some voluntary curbs, then you could press the price of oil up at the margin, and so that means that you're pumping less but actually getting more. It's a tricky situation. Who would do that?
It is. That is exactly it, Francine. So when you think of the perspective of Saudi Arabia, for example, even our own Bloomberg intelligence groups have put out reports suggesting that the break-even rate for them is north of $100. So the calculation for Saudi, which is obviously the main swing producer within OPEC, is are they willing to give up market share in order to support prices? Because the alternative is, let's say they pump at full capacity, 11 million barrels per day, but at a much lower price, in which case everyone pays the price for that. So what they're ultimately trying to do is to put some support behind the market and to keep oil prices roughly where they are, around $80.
Jumana, thanks so much. Jumana Bersace there in Dubai. Now, this is what the picture looks like for some of the stocks we're watching. For example, corporate Dell shares pre-market down 13%. Up next, Bloomberg Brief with Danny Berger and Manus Krani in New York. This is Bloomberg.
What are you most worried about in the global economy now? Is it the geopolitical environment, U.S.-China, Ukraine? Is it inability to pass the debt limit extension? What are you most worried about?
I think most of the time I would answer the same way, a financial crisis.
As a human, I worry a lot about the Chinese invading Taiwan and World War III coming on. But in that case, I don't think whether you invest with David Rubenstein or Cliff Asins is the really big issue. So I think a financial crisis I worry about because they're very unpredictable. After the fact, everyone predicted them. But before the fact, they're not very predictable. I don't think anyone wants a financial crisis. You think you'll do well, and something happens that boomerangs, and you don't.
Well, as we talk, we've seen Silicon Valley Bank basically go under and have to be bought. And there are other banks that have some challenges. Are you worried about a banking crisis or not so much?
Worried enough to put it on my worry list. I have no special knowledge of banks, commercial real estate and banks that deal in that, maybe a more nerve-wracking place, how that shakes out in cities. So, yeah, those things worry me, but not especially more. I think even before SVB, I would have said financial crisis is a very low probability. When someone says their biggest worry, doesn't mean they think it's likely. It means they think it's possible and would be terrible.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
Good morning from our global headquarters in New York. I'm Manus Cranny with Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Guilty as charged, former President Donald Trump found guilty on all 34 counts just 5 months ahead of Election Day.
This was a disgrace. This was a rigged trial by a conflicted judge who was corrupt. It's a rigged trial, a disgrace.
Dell plunges after earnings. Its AI server business fails to impress high expectations. And it's the countdown to PCE. The latest inflation data is expected to show a slight moderation in April. Good morning, Manus. Anyone hoping for a boring end to the week is badly mistaken.
Absolutely. History in the making, both in terms of the former president now being found guilty. He's a felon. And there's another thing in Washington as well. Data, we'll talk about that in a moment. We've got European data, and that's worse than we estimated. We had a hot print in France. That was a hot headline a little bit earlier. But now we have core PC coming in at 2.9% year on year, plus 0.2% on the month. So again, Danny, we saw energy as the protagonist in the French inflation numbers. So this is certainly more than they had anticipated. 2.6% in May. The median estimate was for 2.5%. This is not what the ECB are going to want to hear. The chief economist, Philip Lane, a little bit earlier this week, talked about the appropriateness to take monetary policy to less restrictive, even if there is a bounce around this year in the inflation. So in the very first instance, that's a little bit of a hotter print.
For what it's worth, month over month is bang in line, 0.2%. There had been a wide divergence of what people expected. One bank expected flat, the other expected up 0.7%. But it goes to this confusion, Manus. We know, at least we think we know, that the ECB will be cutting next week, will be cutting next Thursday. What happens after that? It is still an unknown point.
Well, the question is whether ECB and the Bank of England, as you said this morning, interestingly, their hands are a little bit tied as we go towards the election in the UK. The rest of the markets, there are markets as well as politics to play with this morning. There was a gouge taken out of Dell yesterday, and in many ways this tech index had a couple of massive moments yesterday. Dell was down 14% at the moment, as of course their guidance did very, very little to invoke a spirit on the upside. The market's still disappointed with the backlog, but it really was the NVIDIA and the AMD as well, which also took a little bit of a smack yesterday. You saw NVIDIA down by 4% and $100 billion wiped off the value. It bounces back by 0.25%, as of course there's a delay in the new licenses we understand in a Bloomberg scoop, to the Middle East. Bad news is potentially good news was the bid side, slower GDP, slower personal spending, maybe something that the Fed will look at in terms of the rates market. Williams sees ample evidence of restriction and an easing in the second half of the year. Of course, the short end of the curve touched, remember, 5%, almost 5% a little bit earlier on this week. And I like what Waldron said at Goldman Sachs. They've got to slay the inflation dragon. Iron ore is in there because, of course, China factory activity, Danny, shrank for the first time in 3 months, and that certainly will unseat a little bit of that growth trade in China.
I am just looking at bonds extending their losses. Yields are higher by 0.05, 5 bips so far this morning off the back of that hotter ECB data. And this is the question, Manus. We're going to get a drip feed of data today. We've already had the Eurozone's CPI. We're going to get PCE today. Is that what we need to concentrate on, or is it ignore politics at your peril? At this moment, the VIX is pricing in a kink in the curve for the election. It's earlier than it usually does it. You could say, maybe it's just because we know who the candidates are sooner than we usually do in an election cycle. Or are we pricing in turmoil? Are we pricing in the unknown entity of what happens around the election, whether we'll actually be disputing the results and what policy will look like in 2025?
Well, we're certainly going to go through a lot of hubris between now and July the 11th in terms of the former president and potentially the GOP, probably the GOP nominated candidate could potentially be sentenced on July the 11th and could, if extreme scenario comes to play, could be behind bars for the Republican National Convention on 4 days later. But we're going to talk more about that in a moment. Let's get to the main headline and dig a little bit deeper into what we heard yesterday evening. The former president, Donald Trump, found guilty.
Donald J. Trump is guilty of 34 counts of falsifying business records in the first degree to conceal a scheme to corrupt the 2016 election.
This was a disgrace. This was a rigged trial by a conflicted judge who was corrupt. It's a rigged trial, a disgrace. They wouldn't give us a venue change. We were at 5% or 6% in this district, in this area. This was a rigged, disgraceful trial. The real verdict is going to be November 5th by the people.
Manus, as you mentioned, sentencing is now set for July 11th, but Trump is all but certain to appeal.
The jury listened. It rendered a unanimous verdict. There will not be a conclusion to this until July 11th. And when that occurs, hopefully everybody will respond to that the way they're responding.
Well, President Biden reacting with one post to garner votes with 5 months to go until the presidential election. There's only one way to keep Donald Trump out of the Oval Office, at the ballot box. And again, calling for donations to the campaign, and both sides were out asking for donations. David Gura was outside the courthouse in Manhattan for the team yesterday. David, good to see you this morning. A long day yesterday. I'm sure we'll get our value out of you today. Again, well done to you and the team. Great coverage yesterday evening in Washington before we went to bed. But here we are. We now move into perhaps a new phase. We have history already made in terms of Donald Trump being found guilty on 34 counts. What I want to know from you is what happens next? We're talking about sentencing. What is the real risk of prison? Because that won't stop him from running for president or indeed being elected.
That's correct. I mean, nothing about the verdict yesterday precludes the president from running again for the presidency, and he is keenly focused on November the 5th, on the general election. Yeah. Of course, July the 11th looms very large. Before we get to that point, we have to get to the sentencing date, and this is entirely up to the judge. It's a discretionary move on his part to decide what kind of sentence the former president is going to get. Now, he's a first-time felon. This is a low-level felony. Lawyers I've spoken with say it's very unlikely that he'll get any prison time. But again, it's up to the judge. The judge has indicated that he's amenable to that or open to the prospect of putting Donald Trump behind bars. There was a moment during the course of the trial when, after Donald Trump violated the gag order numerous times, for a $1,000 fine each time, he recognized that wasn't much of an incentive for the former president to stop talking and raise the specter of putting him in jail. So it's something that the judge is clearly aware of as an option and might do. That would be extraordinary, and I think that what we've seen all along over the course of these proceedings is in awareness of the unprecedentedness, historicalness of all of this, the judge being very careful to tread lightly in light of that.
Right, and I mean, it's obvious, but it is uncharted territory. We've never had this before. So what do we know about how the voter base, how Trump's voter base, how independents might react to this?
There's a lot of calcification in the Republican Party right now. There are people who stand behind Donald Trump and are going to continue to stand by him. There's a sliver of that electorate that might find this distasteful or changes their opinion of the former president. We don't fully know how large that segment is, but we saw in the immediate aftermath of this verdict, high-level members of the Republican Party, many of whom had made this pilgrimage from Washington to New York during the course of the trial to stand behind him outside the courtroom. Some of whom went in the courtroom to sit behind him as the proceedings were underway, backing him, putting up statements decrying the process that had taken place, decrying the justice system more broadly. So the party itself had been coalescing around him, obviously, in terms of how much he'd moved in the primaries and is the de facto nominee for the Republican Party, and we're seeing kind of them doubling down on that now.
It's interesting. Terry Haynes over at Pangea says it's neither a seismic negative event for Trump's candidacy, many had hoped for, and nor is it a meaningful boost for Biden. Let's talk about the Biden House. They put out, both sides put out a call to action for money yesterday, but Biden needs to shift the narrative now. It wasn't so much about the hush money that we need to focus on, but it's about shifting the narrative that this was about manipulating an election. Is that where the Democrats move to in their messaging?
I think you see in that tweet that you put up, that X post that you put up, the way that the White House is framing this, and that is the real verdict on this is going to happen at the election. I think that the White House is obviously probably pleased with what the verdict was yesterday. They can paint him as a convicted felon, paint Donald Trump as a convicted felon, but I think that they recognize that this election is going to be won or lost among the American people on policy issues going ahead to November. You're right about this being an effective fundraising tool. We saw the Republican Party, we saw groups affiliated with Donald Trump raising a ton of money yesterday. Democrats obviously trying to capitalize on that as well. We'll see how all of this plays out. Again, there's this kind of interesting vacuum that's opened up here in this month ahead of the sentencing where the president is keen to move this from kind of the legal arena to the political one. All the while, he still has to keep this foot in the legal arena as the appeals process gets underway.
Right. Well, that's interesting because it sounds like both president and the presidential candidate are saying that the verdict will be decided in November. So almost similar messaging when it comes to that. David, thank you so much for getting up early for us and joining us. That is David Gura, host of Bloomberg's Big Take. All right, Manus, let's get some of the other top stories that are trending on the terminal this morning. China's factory activity unexpectedly contracted in May. The reversal in manufacturing after 2 months of gains is a threat to Beijing's economic growth targets. And there's an additional risk in the pipeline for Chinese manufacturers with trade tensions escalating.
Bank of America CEO Brian Moynihan says the firm's investment banking group is on track to report a 15% growth. The group seems to be continuing its positive momentum as companies return to capital markets and deal-making. Moynihan also says the bank now expects net interest income will be 1% lower than previous projections due to deposit pricing dynamics.
Tesla shareholders are being urged by institutional shareholder services to reject CEO Elon Musk's pay package. ISS says the $56 billion package was outsized from the start. The opposition comes days after another prominent proxy advisor, Glass Lewis, rejected Musk's pay.
Coming up, we catch up with Max Kettner of HSBC, his version of good news and bad news, and the view on the Trump verdict.
And U.S. officials are putting limits on AI chip exports to the Middle East. We're going to discuss that, what that means for tech giants like NVIDIA here on Bloomberg Brief.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's your Bloomberg Brief. I'm Danny Berger with Manish Cranny in New York. Now, Manish, we have a historic verdict of former President Trump. It's not only impacting politics, but could it impact markets as well? Ed Yardeni, founder of Yardeni Research, writes that the stock market has a history of tuning out domestic political turmoil. However, the political climate is clearly going to be even more volatile after the Trump verdict, which could increase volatility in the stock market. Let's bring in Max Kettner, Chief Multi-Asset Strategist at HSBC. Max, is this time different? Should we be pricing in more volatility for this election?
Yeah, good morning. No, I don't think so just quite yet because, I mean, number one, when we look at volatility right now, when we look at the VIX, you know, even after this week's wobbles, we're standing around 14, so we're standing on pretty low levels. Should that really change? I don't think so, because when we look at the recent gains in particular, they've really been driven by a handful of names. They've been driven by NVIDIA, again, by these AI hopes, by these really solid earnings. Look at, for example, not only at the US, but globally in equity markets. Look at the European earnings season, the EM earnings season, the US earnings season, of course, as well. We've had really, really strong earnings during the Q1 reporting season. And to me, I think those fundamentals just trump the election volatility, really, because when we look at it, you know, at the end of the day, we're not going to really sell tech or buy tech, given what the latest polls are going to say. At the end of the day, it's really about the earnings power and about the margin resilience that particularly the US is showing, and even outside of tech, where we see that margin resilience. At the end of the day, that, I think, is really much more important.
Yeah, and look, you've mentioned NVIDIA, and we've touched on this a couple of times this week. In other words, their propulsion higher after their results did very little for the rest of the market. I want to touch on the data. I mean, there's two events in Washington. One is political, and one is, of course, data. Now, you are skeptical of the, let's say, economic surprise that we've had. This beautiful chart that we have for you, which shows the ratcheting higher, the weaker economic data. But you say you're a little bit mistrusting of that. It's not as bad as the chart might suggest. Even though you had this slowdown in GDP and personal spending yesterday, you still hold tight to the, I will not be shaken. Bad news is good news. Long live Goldilocks.
Yeah, 100%. Simply because when we look at the nowcasts for the second quarter, we've moved from above 4% real GDP nowcasts for the second quarter to currently around somewhere around 3.5%. Now imagine, instead of negative surprises in the last month and a half or 2 months, imagine we had positive surprises instead. What we would be talking about, we would probably be talking about like 5-ish% real GDP growth in Q2. Add, just for the sake of it, add 2% inflation on it, right? Even though that at the moment sounds, you know, not really realistic, but even that would bring us to 7% nominal. If we were talking about a 7% nominal growth in the second quarter, we would really not be talking about rate cuts anymore. We wouldn't be talking about when does the Fed cut rates. The debate would be how much does the Fed have to hike. So actually, those kind of mild downside surprises that we've seen in the hard data, that are, you know, they are really not too discomforting, because at the end of the day, they bring us down to slightly healthier growth levels. And let's remember, 3.5% is still twice as high as potential growth in the US. So it's still really strong growth numbers for Q2.
And Max, for the most part, that's how this market has reacted. You could see it earlier this week. The quote-unquote good news of stronger consumer confidence meant that stocks sold off. But yesterday, We got the baddish news that you're talking about. That seems like it would be perfect to have that narrative of bad news is good news. Yes, growth comes in a little bit, but inflation also comes down. Yet this is a market that's sold off. Has something changed?
No, I don't think so. We will have those occasional days where, of course, those idiosyncratic, these single name stories are probably sometimes overshadowing the bigger picture, right? So at the moment, what we're really seeing is that the market is moving from one extreme to the other. Look, for example, 1 month ago, we would have talked about stagflation. The 10-year yield just moved up from sort of 420 to almost 480, and then we had input prices higher, commodity prices higher, and, you know, people were suddenly talking about stagflation or those negative surprises being the first signs of a recession. And then, you know, came retail sales and CPI, and suddenly that was all over just because of 2 data points, and suddenly for 3 weeks, it was all rosy and it was all Goldilocks and no signs of high inflation whatsoever. And now, you know, yesterday, for example, we had, of course, Salesforce. We had a bit of an idiosyncratic wobble there. But, you know, when we look through those really day-to-day idiosyncratic stories, I think it becomes pretty clear that inflation is stuck. It's not really picking up hugely, but it's also not going down, and growth is just fine. So that means when you want to trade tactically, it's probably more on the rate side. But equities, high yield credit, emerging market debt, risk assets overall really should be doing totally fine because growth is still on such firm footing.
Mac, you've gone very, very British. Terribly fine. I love the phrase. It should be terribly fine. Don't ever lose your inner German. Briefly, in 30 seconds, is your bullishness on high yield a yield enhancement program on top of the portfolio? Briefly.
Yes, 100%. I think the spread overall, 300, doesn't look particularly attractive, but all-in yields around about 8% look very, very attractive, or terribly attractive even, when we look at, of course, you know, when we look at that. And of course, you know, for non-dollar-based investors, if you're looking at US dollar high yield, you're long the dollar, and if something goes wrong, you know, the short end of the rates curve should be going down, and that helps you as a hedge as well.
Well, we're delighted that you joined us, and we're terribly excited about the high yield enhancement. Max Kettner there, on the context that matters in markets. This is Bloomberg.
Names in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
It's your Bloomberg Brief. Danny Berger and Manish Kranny in New York. So Dell reported its first revenue increase since 2022. But Manish, it is remarkable the extent to which investors are willing to punish any miss. Down 13.5 in the pre-market, with high expectations for its AI server business that it didn't live up to. Let's dig into the results with Bloomberg's Kriti Gupta. Kriti, it's like Salesforce all over again. The numbers are okay, but the market punishes them. So what went wrong?
Well, the bar is quite high for a variety of reasons. You have to think about this in the context of Dell kind of being this old guard of tech alongside the likes of HP, for example, along the sides of Oracle. The onus is really on them to show that they can really capitalize on this AI trend, as opposed to really stick to kind of that hard gear, hardware business that they're so used to and have been rallying off of for the last, I want to say, 2 decades or so. Look, the numbers were great. The sales were up. The revenue was up. They're talking about this record backlog when it comes to these AI servers. So there's a couple of things that went wrong here. One, the expectations were really, really high. And you're seeing this go from a lot of the names that are starting to say that crucial artificial intelligence phrase. The bar to impress is only getting higher. And you can see that with the likes of NVIDIA, for example, as well. The other piece of this equation, Amanda and Danny, you pointed this out in the break, the concept of margins. I believe you pointed out from Bernstein, where you're getting it from JP Morgan as well. And I think this line really stuck out to me, that the margins are coming in below expectations for both the reported and the guided 2 quarters. So it looks like there's a little bit of pressure on not only getting in on the AI trend, but making money off of it as well.
Yeah, well, it was a heck of a smack that they took, wasn't it, in terms of the overall performance on the day, down the most. What was it at one stage? Really took a pacing, down 18%. Let's talk about the other chip makers, because we understand there's a delay or a slowdown in the licensing and the export licenses for NVIDIA chips to the Middle East, for AMD to the Middle East. What's behind this story? I mean, this is a source's story, so what have we got?
Well, this has a lot to do with national security, and not particularly in the Middle East, but this campaign from the Biden administration in particular to make sure that that technology does not make its way into China. And there's worry that the access that the Middle East might get might ultimately end up there. That being said, when you talk about the market read-through, remember, NVIDIA and AMD are both really trying to diversify their business, not in terms of getting outside of just the hyperscalers in the United States, but really taking this global. The fact that there's a little pullback in those export licenses is the cause for concern. So you did see NVIDIA take a bit of a hit yesterday, dragging the entire market lower. And you're already seeing that read through this morning into Europe as well, and certainly in the Hang Seng Index over in Asia.
Yeah, NVIDIA, down 4% at one juncture, 100 billion off the market cap. Small bagatelle, really, to NVIDIA. Kriti, thank you very much. Coming up, a little bit more on the former President Donald Trump's verdict. That's next. Context Matters on Bloomberg.
Look at the number of women that want to learn the game, young girls that are joining on the tee. Really an exciting time for all of us to really capitalize on this moment. When you look at women who are making most of the purchasing decisions in households, whether that's cars or that is home or financial services, and who are going to drive the wealth of the future, it's women.
Obviously, we have our car business and we need to have games here and all that sort of thing. But what else can we do? How do we grow the platform? The whole ticket pricing process. It used to be very yellow sheet of paper, maybe some numbers around it. There was not a lot of science behind it. We're now in the world and have been for many years, as most other similar businesses are, to dynamic pricing. So our pricing for a seat may change hourly if we see demand for that, all driven to maximize revenues.
The balance sheet is so important to the success of the team. And a big part of my role is to make sure that the balance sheet stays strong and that we are prudent stewards of capital. There are things that we can do that are irrespective of winning or losing. Take a look at the first budget that comes from one of the teams and ask questions about, do you really need to spend that much? Are you really shooting high enough when it comes to partnership revenue?
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our global headquarters in New York, I'm Danny Berger alongside Manish Krani. Let's set your agenda.
Guilty as charged, former President Donald Trump found guilty on all 34 counts, just 5 months ahead of Election Day.
This was a disgrace. This was a rigged trial by a conflicted judge who was corrupt. It's a rigged trial, a disgrace.
Dell plunges after earnings on the AI server business fails to impress investors' high expectations. And it's countdown to PCE, the latest inflation data expected to show a slight moderation in April.
We already got European inflation data coming in slightly hotter for the headline. That meant bonds lower in Europe. In the meantime, it is an S&P that's down 0.2%. It is a head scratcher. Is the bad data good news? Is bad news good news? Max Kettner says it still is, but that's not how the market treated it yesterday. We sold off, we sell off again. NASDAQ futures even lower, 1/3%. It is Dell that is dragging us lower. It is a market whose propensity is to punish any company with any slight miss. U.S. 10-year yields, that perhaps the more logical response. Yesterday, we got a rally. Today, a slight sell-off, higher by 1 basis point. But man, are we in this environment where it's ignore politics at your peril? Ed Yardeni says that, look, this time around, there's potentially more volatility you need to price in. Max Kettner, who we just spoke to from HSBC, said earnings are still good. The economy is still strong and inflation is moving in line. So who cares about politics? The fundamentals are strong. You can be max bullish.
Look, the bond markets are really only going to raise their eyebrows when they know the color of the administration that's going to be in the White House next year. And that has fiscal consequences. You have a tailwind from fiscal boosts going through this year. They're still there, the Inflation Reduction Act, etc. It's interesting how the PCE has been trumped by the news flow on the front pages. There are 2 events in Washington today, not just, of course, what happens politically and the responses, but just in case you missed it, it is 5:30, 17 seconds, and we will talk about the PCE at some juncture.
No, but I think that's exactly right, that 2025, we don't know what it's going to look like.
It's so much more exciting to talk about politics than it is about the PCE, to be fair.
Yeah, it is, unless the PCE is something crazy and dramatic, and then we have 2 dramas to deal with. One is maybe more historic and consequential than the other, so let's talk about that one. It is former President Donald Trump found guilty.
Donald J. Trump is guilty of 34 counts of falsifying business records in the first degree to conceal a scheme to corrupt the 2016 election.
This was a disgrace. This was a rigged trial by a conflicted judge who was corrupt. It's a rigged trial, a disgrace. They wouldn't give us a venue change. We were at 5% or 6% in this district, in this area. This was a rigged, disgraceful trial. The real verdict is going to be November 5th by the people.
Well, sentencing is set for July the 11th, but Trump is all but certain to appeal. Here's the Democratic Congressman Jim Salburn speaking to Bloomberg.
The jury listened. It rendered a unanimous verdict. There will not be a conclusion to this until July 11th. And when that occurs, hopefully everybody will respond to that the way they're responding
President Biden, for his part, reacted with one post to garner votes with 5 months to go until the presidential election, saying there's only one way to keep Donald Trump out of the Oval Office, at the ballot box. Joining us now is Bloomberg's Anne-Marie Hordern. Anne-Marie, we have this historic and uncharted event that happened yesterday. So what now?
It is historic. It's uncharted. We've never had a former president, let alone the next candidate on the Republican Party, to be president convicted guilty of 34 crimes. And that's what we had last night. Now it's all about the timeline and what this potentially would mean as well for voters. So when it comes to the timeline, obviously everyone is focused on July 11th when we'll get that sentencing. Obviously, Trump camp already has insinuated and said out loud that they are going to appeal. Before that also, it's going to be a vote, basically, these two individuals, Biden and Trump, trying to garner votes. There's going to be a debate at the end of June. That's going to be important because how does Biden talk about this conviction? The only thing we really saw yesterday was the campaign talk about the fact that the one thing they potentially both agree on, Trump and Biden, is that this is going to be decided by the American people at the voting box. And then that's the second point. The polls are really mixed on what this means for the electorate. So here are two key ones that were recent. PBS NewsHour, NPR, Marist polling. They say 67% of voters said a conviction would make no difference to them when they cast their vote in November, including 74 of independents. Remember, if Trump's going to win, it's not just his own people he needs to bring to the ballot box. It's those in the middle. But then we had a Marquette Law School poll of registered voters, and they found that a guilty verdict would produce 4-point win for Biden in a national hand-to-hand matchup with Trump, while a not guilty verdict would have resulted in a 6-point lead for Trump. So you could see it's mixed, and that's why the messaging is going to be key.
But then where does the messaging go? One of the themes that came out yesterday evening during coverage was the Biden administration needs to shift the narrative along. Not so much that it's around the hush money aspect of this trial and the conviction, but it's about the potential impact on an election, and that's where the tip needs to come. The shift needs to come in terms of how you present what happened on these 34 counts yesterday.
I think the one thing the Biden administration is going to want, either the president when he's out campaigning, and especially in front of donors, or if you have any of the surrogates out on the trail, he's going to want to basically just say, Trump has become the first former U.S. president guilty of crimes, period. The issue is they probably don't want to go too much into this because they don't want to see that they're trying to weaponize what the Trump campaign says they are doing, this verdict. So it's a tightrope that he needs to walk. But again, both camps will be using this in both directions, and we saw it last night almost immediately to fundraise on.
Do we know if Trump can vote for himself? Or is that still an unknown thing? Like, because in Florida, right, if you're a felon, presumably you can't vote for himself. I mean, what is sort of the mood among the Trump camp, especially coming out of yesterday? This historic thing, a felony, I mean, are they just gung-ho, guns a-blazing, or were they seemed surprised by this?
I don't think they were surprised, and you heard that from his legal team, that they were expecting this. They will continuously say this was done by a jury in New York, a state, obviously, Trump did not win, a state that leans very blue, and they will talk about there's this inherent bias already in this jury. There's one interesting thing that we did write about, and this is according to people familiar with the matter in our reporting. This is something that Trump didn't want. Despite the public-facingness of the campaign, despite that they're coming out and they're saying we're going to fight this, you know, a bull in a china shop, this was wrong, this was a disgrace. Trump did not want to be convicted as a felon.
No, I mean, no, look, that's not the optimal scenario to go to the ballot box or to the American public, even though the polls suggest that his core voters, the GOP voters, weren't going to be swayed that much. I was looking at one of the ABC polls. They're not going to be swayed that much by this conviction. Money talks, okay? Money really talks. Schwartzman standing behind Trump. Haley has put her political baton behind Trump. We're going to talk a little bit more about Bill Ackman in just a moment. A little bit of breaking news on that. We understand he is readying to back Trump. So the donors, the real private money donors, and I emphasize the word private versus public, they are unabashed and unafraid and not dissuaded from backing Trump at this juncture.
That's correct. We heard from Steve Schwartzman on Friday. We're waiting on potentially this endorsement from Bill Ackman. Bloomberg had some reporting on that. Sheldon Adelson's wife, Miriam is planning on also backing Trump going into this election cycle. And then we also had other names. Sean McGuire, partner at Sequoia, coming out yesterday saying this verdict meant that he actually wants to put money behind Trump. He's talking about a lot of money. And obviously there's a lot of laws regarding how much you can donate specifically to a person, but there's super PACs. There's other ways to go out and support Trump. So you do have people coming out and saying that they're unnerved by this verdict. At the same time, Terry Haynes of Pangea says actually he thinks that this means that Wall Street's going to maybe want to take a step back, pause, and not put all their money into it. But so far, we haven't seen that, especially with some key names.
Well, Terry doesn't say, I mean, he also makes the point that it's not exceptionally injurious at the moment. It's just going to be harder for Trump maybe to unify the GOP. Anne-Marie, great reporting. Look forward to you and the team covering the next couple of hours on this and beyond. Now, we spoke about Bill Ackman, didn't we, Danny? Of course, we have breaking news that he plans to IPO Pershing Square. This as soon as next year. Now, this is a Wall Street Journal article, and we're looking at potentially a valuation of $10.5 billion.
Okay, this to me is kind of strange. One, we talked about this yesterday when we were talking about the IPO of Golden Goose. It is a bad market to IPO into unless you are a tech company. Also, just a hedge fund IPOing. This is something that happened a lot before the financial crisis, but it's really dried up since. It is a fickle business that is extremely cyclical. But Manus, I can't help but wonder whether Ackman is trying to capitalize off of his social media fame. He's been tweeting a lot recently, especially about campus protests, the Israel and Hamas war. He had a prospectus out last year about trying to get approval for a more retail-oriented fund, and in that he said, we're doing this because he has a big social and big public profile. So is this the same thing?
Well, I think of the debate, if you think, yesterday we interviewed the CEO of the sneaker company in Italy, and as you said, the successful IPOs have been in the tech space, not in the finance space. And as to regard his newfound sort of presence on social media, if we look at Schwartzman's backing of Trump, Schwartzman's backing of Trump is driven around the politicization, the anti-Semitism that he believes is very, very present. So there's a number of motivators for two different sizes. But Ackman going for a $10.5 billion IPO, we understand, from the Journal. Context matters on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
It's your Bloomberg Brief. Danny Berger and Manus Cranny in New York. You know, there is some other news today besides the Trump trial. It's the PCE today, and we're counting down to it. And as we are, Dallas Fed President Lori Logan did speak yesterday, saying that policy is just not as restrictive as we think it might have been relative to the level of interest rates before the pandemic. It's really important to keep all options on the table and that we continue to be flexible. Something a little bit different than Williams yesterday. Joining us now to break it all down is Bloomberg's Mike McKee. Mike, let's start with the PCE data. What's on tap? What are we expecting?
Little change in what we've seen in recent months, but a slight move to the downside, which would maybe give the Fed some more confidence about inflation continuing to fall. PCE came in up 0.3 last month. It's expected to come in up 0.3 this month, and no change in the headline number. The PCE core may come in a little lower, according to the experts in the forecast, the consensus forecast, 0.2, and that would give people some reason for hope, but all this ends up going to 3 digits and rounding. Also important, though, the income and spending numbers. If incomes fall or don't grow as much, people will have less money to spend. And then the question is, if retail sales have dropped off, did spending on services fall as well? So a lot of information today in the day's other story.
Well, we certainly know that the Fed, the other story. Well, there are two events. There's two events in Washington. Well, one is in New York. The consequences is in Washington. When we look at the trend within PC, we understand the transportation costs may well come down ever so slightly. But we look at the 1 month, 3 month, and 6 month PC, it's still nowhere near where the Fed needs it to be if it's going to act just on inflation narrative, disinflation narrative alone. And I emphasize the word alone. We'll come to the jobs number in a moment. But the trend is still not materially the friend of the Fed.
No, it's not. And the question today that people are going to have, and what the Fed's going to do, is deconstruct this report and see where the inflation is coming from, if it's one-off stuff, or do we finally get rent prices going down, which they've been waiting on forever. And then, man, it's one thing that you and I have talked about before, the POGO problem. Portfolio management has been very inflationary because as the stock market goes up, the Wall Street people get paid more on commissions, and that has added to inflation. So that's something to keep an eye on as well. There is an expectation that that could go up a lot, and you can see why with the S&P up the way it is.
As a former broker, I have no objection whatsoever to brokerage fees and assets under management rising incrementally and in a fair way and in a just way.
You're so kind to your ex-colleagues, Manus.
Yeah.
Wanting the best for them.
I just want to make sure that my rich friends stay rich so that we've got houses to go to when I get a little bit older. There's
it's a good strategy. I like it.
There's a good strategy. Mike, thank you very much. What motivates me on a Friday morning? Let's talk to Kathy Bostjancic. She's the chief economist at Nationwide Mutual Insurance, and she writes this. Kathy, good to see you this morning. Let's just put in context where your thoughts are. We still expect the initial Fed rate cut in September, with the risks tilted towards later and fewer cuts, as long as the economy stays resilient and inflation is stubborn. Do you think we should still be talking about, Kathy, good morning, still talking about the risk of stagflation?
Good morning, Manus. You know, I don't really see this as a stagflation environment, right? It's very different than the 1970s. But I could see why people think of it that way, right? We do have economic activity slowing or moderating, I think is a better word. And we see inflation remaining elevated and sticky. And it's certainly higher than what the Federal Reserve would like, as you pointed out. Even if we get a lower print on core PCE, that 3 month, 6 month annualized run rate is still high. So, I do think that the Federal Reserve is going to continue to be more cautious here, just as we heard from Lori Logan and some others. They're questioning whether they have the right, level of restrictiveness for the economy right now. And part of that is because, many homeowners locked into low mortgage rates. 40% don't even have mortgages at this point. And then companies were able to term out and lock into lower debt for some period of time. It's really, it's the marginal borrower, right? It's the small businesses and middle to low income households that are feeling the burden right now. So I think monetary policy still works, but maybe not as restrictive as they had thought.
And as you say, that's what Lori Logan said. But Williams yesterday, Kathy, said that there is ample evidence that policy is restrictive. Are we finally getting disagreement among FOMC members? Are we finally there? And if it is disagreement, what does that mean when some members, when Powell starts to push for a cut, and you have Lori Logan saying policy may not be as restrictive as we thought?
Great point. I do think we are seeing, some divergence of opinion. That's healthy, and I think it's warranted, right, given the data. But I think, the evidence at this point, even for those who are a little more, I guess, on the dovish side, I don't know if you could characterize it that way, but the evidence has to be overwhelmingly clear at this point, and I think that's across the board for the FOMC. So I think when they do decide to cut rates, I would suspect that everyone will be on board, or at least you won't get that real objection to that, dissenters at a particular vote. But let me point out, I was just doing the math this morning to get the Fed's year-end Q4 of a Q4 core PCE number. You need to get a string of 0.2 increases monthly, and then sometime in August it has to decelerate to 0.1 per month. So it's really hard to get the 2.4, and that's why they've scaled back. Right, 3 rate cuts are no longer on the table.
Maybe it makes sense to join Torsten Slok and just throw your hat in the ring and say, look, it's statistically going to be pretty much a nightmare to get there. No cuts this year. I mean that, given what you've just laid out as being a statistical challenge, maybe the more realistic thing that the market has yet to really grapple with is no cuts this year.
Yeah, it's quite possible. We, as you indicated, our baseline is September, but certainly it could be later. It could be no rate cuts this year. We're optimistic at some point you do see rental inflation roll over. Transportation costs, other service costs start to moderate. So if it's not this year, should be next year. But I think the bond market's kind of moved along with that, right? I think we have less than 2 full rate cuts priced in by year end. And the equity market, well, maybe marches to a slightly different drummer at this point.
It still feels like 2025 is unknown at this point, Kathy. And Manus and I have been talking about, as the whole world has been talking about this morning, of the historical nature, unprecedented nature of a presidential candidate who has been found guilty of crimes, is now a felon. When you look at 2025, the unknowingness of policy, the unknowingness of what immigration will look like, any volatility around what some might say is legitimacy of an election, which of course has been greatly disputed, no evidence that the past one hadn't been. But Kathy, what does that do to your 2025 outlook? How difficult is it to form at this point?
Well, I think this cycle, in and of itself, aside from any elections or the volatility of inflation, has just been really difficult, right? It's a post-COVID business cycle. We really haven't seen anything like this. It doesn't kind of move along those typical business cycle changes. And that said, if namely, for the Federal Reserve, and I think for the markets, it's inflation. The election, we'll see what that brings, and I'm really interested in the policies, right? Like, what policy do we get on trade, tariffs, taxes, immigration? To me,
Kathy,
those are the key.
We're going to have to leave it there. Thank you so much for joining us this morning, Kathy Bostianczyk of Nationwide Mutual Insurance. This is Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
This is Bloomberg Brief. I'm Danny Berger alongside Manus Cranny in New York. Let's get you set up for your trading day on this Friday. What a Friday. What a week it's already been. We're going to get a slew of economic data coming out with PCE 8:30 a.m. Eastern. It comes alongside personal income and spending. Then former President Donald Trump will be speaking at 11 a.m. Eastern after being found guilty on 34 counts. And then over the weekend, Manus, OPEC Plus will meet and is expected to prolong roughly 2 million barrels a day of output curbs in the second half. It's virtual, if I'm not mistaken, right, that meeting?
Yeah, they've gone virtual. Lots of reasons were put forward, potentially the health of the King of Saudi Arabia. But the big risk for OPEC watchers is whether they extend and come up with a plan going into 2025. But it's almost as if that's all dropped down the register. We've got two major events in Washington. One is the PCE, and the other is, of course, there isn't enough can be said about the history in the making in terms of the conviction of Donald Trump. He's now a felon.
Yes, and if we talk about this in the Bloomberg way of markets, it doesn't matter. Max Kettner says it doesn't. The fundamental earnings are strong. Yardeni says it matters for volatility in this market.
In terms of the impact on the parties, you're going to hear from Trump at 11 a.m. We'll have full coverage on that. And Pangaea says it just makes it harder for Trump to galvanize and unite the Republican Party. They'll debate that and more on Bloomberg Surveillance. From Danny and I, have a good weekend.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, Zabe Poland. He did come to me and Susan O'Malley, and they said, Abe Poland says, look, I want you to be the face of the Washington Mystics.
And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep reading World Cup.
This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
The economy is probably not as interest rate sensitive as it was in previous cycles.
Some of these most interest rate sensitive sectors of the economy, you are seeing a bite.
We are seeing interest rates bite different parts of the economy at varying speeds.
In a world of higher long-term interest rates, equity returns are likely to moderate.
The housing market is really kind of the first domino to fall in what we think is going to be a slower growth story down the road.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get you to the weekend. Live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance, where equity futures are negative by 0.2% on the S&P 500 as we head towards a week of losses on the benchmark and the equity market stateside, just before we get another read on U.S. inflation at 8:30 Eastern Time. Plenty of coverage on that in just a moment. We begin, though, with our top story. The President of the United States, Anne-Marie, found guilty.
Found guilty on 34 counts. This has to do with the hush money trial that has been taking place in downtown Manhattan. This has to do with falsifying business records. Coming out of this, though, the former president greeted cameras. He called it a disgrace and something him and the current president, Joe Biden, agree upon. That was the rhetoric following this conviction yesterday, that it is going to be up to the American people to decide who should be in the White House.
Well, check out the calendar for the next month or so. This is what it looks like, and it's quite a calendar. June 27th, debate between Trump and Biden. Bramo, July 11th, Trump sentencing. 4 days later, RNC.
Which is really kind of the key question to me is how much do the Republicans continue to consolidate around Trump? Right now, he really has had the gravitational force. So far, the rhetoric from all of the Republican Congress members has been incredibly supportive. Can you imagine, though, what it looks like if, say, he's sentenced to jail right before the convention in Milwaukee, Wisconsin? A lot of questions, a lot of polls suggesting that this won't change anything. It just feels uncertain how much to weigh it from a market perspective, which is a reason why it's not doing much at all.
Well, we can talk about the money. The fundraising started almost immediately. The former president's campaign, they've raided my home, arrested me, took my mugshot, and now they've convicted me. Before the day is over, I'm calling on 10 million pro-Trump patriots to chip in. Well, some billionaires are about to chip in. Miriam Adelson, Steve Schwarzman, Harold Hamm reports that Bill Ackman will do the same thing.
Absolutely. What you saw last night actually is Trump's campaign website falter because too many people were trying to log on. On Friday, what we saw from Schwartzman is that he said he's going to vote for change. Miriam Alderson, our reporting, is that she's prepared to come in with some cash. Bill Ackman is prepared to endorse him. Also yesterday, Sean McGuire, partner at Sequoia Capital, he's backed several of Musk's company, said that he's putting more than $300,000 towards the Trump world to make sure that Trump becomes president. Some of this has unnerved big donors, and they're going to stand behind him.
I guess one larger question that I have is we have the likes of David Sachs coming out, who does support Donald Trump, talking about how there's only one question now, whether the U.S. will be a banana republic. On the other hand, it's law and order, and this question of if there are 12 jurors that were selected by both sides who did convict him, there is a question about what this does to the sort of establishment of institutions more broadly. Is there going to be attack on both sides in a way? At a time when a lot of people are kind of casting doubt on the importance of why this case was brought. Not necessarily the legitimacy of this case, but why it was tried at a time when a lot of people are saying, Okay.
What changed for the electorate yesterday afternoon? We need to talk about that. What actually changed? And the incoming polls will be closely watched for this. But going into this, the poll that you cited from NPR PBS, right before this verdict, 2 in 3 registered US voters say a guilty verdict would have no effect on whom they plan to vote for in the presidential election come November.
What's so interesting about that poll is that 74% of those were independents. That's the key margin for both of these individuals to win. Trump is going to bring his base. Biden is going to bring his base. 7 swing states, it's the people in the middle that matter. But going into this verdict, polls were mixed. We also had a May 23rd poll from Marquette Law School, and this is what they had to say. A guilty verdict would produce a 4-point lead in a national head-to-head match for for Trump, with a not guilty verdict would have resulted in a 6-point Trump lead. What it says is it's mixed, so it matters now the messaging going into November.
We've got a lot to talk about this morning before we get to June, never mind November. Equity futures on the S&P 500 negative here by 0.2%. Here are the scores in the bond market. Yields just a little bit higher by a basis point, 455.60. Yesterday, BMO's Ian Lingen, it was a bond-friendly round of economic data. We'll see if we get the same thing again at 8:30 Eastern Time. Yesterday was kind of fascinating. We had the former New York Fed President Bill Dudley in a Bloomberg opinion column saying maybe we're not restrictive enough. And then the present New York Fed president come out and say that we are restrictive enough. I think we could all see what was happening there yesterday afternoon.
Basically, New York Fed President John Williams came out and said, all right, Bill, no way. These are the exact words. I expect inflation to resume moderating in the second half of this year. He remains on track. Lori Logan, however, I thought was really interesting. She kind of supported a little bit of what Bill Dudley said. Dallas Fed President coming out and saying basically policy may not be as restrictive as we think it is, and all policy responses are on the table. Again, yes, we pay attention to the big 3. It still is interesting how much differential there is.
You want some good news? Here's the good news for you. This is it. Quiet period after today. No more Fed speak through next week, going into the decision the week after that. Coming up this hour, here's the lineup for you. Terry Haynes of Pangea Policy, as former President Donald Trump prepares to campaign as a convicted felon. Peter Chia of Academy Securities, as investors await the Fed's top inflation gauge. And Ellen Wald of the Atlantic Council, as OPEC debates production cuts into 2025. We begin with our big story. Former President Donald Trump found guilty.
This was a disgrace. This was a rigged trial by a conflicted judge who was corrupt. It's a rigged trial, a disgrace. They wouldn't give us a venue change. We were at 5% or 6% in this district, in this area. This was a rigged, disgraceful trial. But the real verdict is going to be November 5th by the people.
Former President Donald Trump set to campaign for his re-election as a convicted felon. A jury of 12 New Yorkers finding Trump guilty of falsifying business records to hide a hush money payment to an adult film star. President Joe Biden's campaign saying this: there is only one way to keep Donald Trump out of the Oval Office, at the ballot box. Terry Haynes of Pangea Policy joins us now for more. Terry, your reaction, sir, to yesterday afternoon?
Well, as far as the election goes, where I keep my focus for markets, I think it's a small, immediate net negative for his chances. What Trump needs to be doing is unifying Republicans and getting a majority of independents on his side. That was the winning formula in 2016. He didn't make that in 2020. Right now, it looks like he's not making it in 2024, with Nikki Haley voters showing 20 to 40% in primaries, depending, right? Even after Haley got out of the race, she still got 15% in Pennsylvania, which will show you a lot. But I don't think it's a seismic negative for Trump's candidacy or a huge bump for Biden. And as you all point out, just in the visual there a minute ago, there's going to be a lot of other bumps just in the next month or two here, including the debate, the sentencing, and the Republican convention. So this thing's going to go back and forth for quite a while.
Terry, what does the mixed polling that we saw ahead of this verdict mean to you? Is this just an electorate that's very fickle on whether or not this case matters?
Yeah, I think so. What you got is a couple of things. One is you've got a lot of people. There are polls about this too. There's a ton of people, as you well know, who haven't been paying much attention to the case at all. So what we're likely to see here, I think, this is instinct at the moment, is that you're likely to see that as the convicted felon thing gets hammered in, a measurable but small drip, drip, drip kind of away from Trump as things go. But also understand that most of the polls, the vast majority of the polls this month particularly, have been registered voters, not likely voters. So, and that matters a great deal. You had a 66.6% turnout in 2020. That means a lot of things, including that if you're looking just at registered voters, you're looking at a huge polling skew all by itself.
Terry, last night I read your note after this conviction. You reminded your audience that, quote, the conviction makes it harder for Trump to attract serious financial and political backing for Wall Street. I haven't seen any evidence of that. To the contrary, Bill Ackman is said to be getting involved, Schwartzman, Adelson. Who do you think this is going to actually impact on Wall Street?
Well, I think it impacts a lot of people because think about the people that you cite are people that are either private or have the ability to essentially say, well, I'm going to do what I want personally and not get any blowback. But on the other hand, if you're looking for the average Fortune 500 CEO or C-suite person who has to answer to shareholders, they're going to be awfully circumspect about about how they put themselves out there, or if they put themselves out there at all. I mean, they don't want to risk public blowback from supporting Trump, I think.
Terry, people are exhausted. I feel like you said a lot of voters aren't following the trials. At the same time, the sort of drumbeat, the drip, drip, drip has sort of steadily undermined people's faith in federal institutions. We've seen this in poll after poll. There was a study recently showing that maybe that is part of what is behind people's sort of negative sentiment, even in the face of better data, at least economically on paper. How much do you think this is going to affect turnout, if nothing else, at a time where there are a lot of double haters?
Honestly, Lisa, I think it's too soon to say. You had in 2020, you had about a 6% turnout bump up. So, and I think that was, in large part responsible for Biden squeaking through there. But there are a lot of double haters, but at the same time, as Peggy Noonan pointed out in the Wall Street Journal today, we're a country that's starting to like to hate. She's not touting this, of course, starting to like to hate in part because it's energizing. So, what political parties count on here, what the candidates are counting on, is that, that sort of energizing actually leads to greater turnout. So, I think there's going to be a lot of energy around this race still.
Do you think that then the July 11th sentencing is actually going to galvanize the July 15th RNC convention in Milwaukee?
You know what? I think the sentencing is, it largely depends on what that sentence is, whether it involves jail time or whether it involves something much less. But either way, the convention in Milwaukee, I think, is going to be put forward at a very high pitch. And my sense of that is that may help the base, which I don't think the standard Trump base really hasn't grown since 2020, and I could cite you a lot of things to show that. But I think that turns off a lot of the independents that are that Trump needs in order to win the general. I think that might be a problem for him.
Terry, you're sticking with Biden, and you've been sticking with Biden for the last several months. Terry, what's the road to November for Joe Biden?
The road to Joe Biden for November to Joe Biden is to continue to show that he's up to the job. Really specifically, Biden's cognitive issues are always front and center with people. I want to point out that Trump's cognitive issues are recognized by voters as well. Voters think that that Trump's got some issues too. But what tears it, I think, is simply that Biden's the incumbent president, and Biden needs to show that he's up to it, and that's the threshold question in the election. Because if he's not, for some reason, things things change dramatically, and I think in pretty unpredictable ways.
Hey, Terry, it's good to hear from you, sir. Thank you. Terry Haynes there of Pangea Policy. Plenty of coverage on this story throughout this morning. Libby Cantrell of PIMCO joining us in the next hour, 7 a.m. Eastern Time. Do not miss that conversation. Let's get back to the calendar just briefly. The end of June, next month, that debate between Trump and Biden, must-watch TV in a much bigger way after yesterday's events.
Absolutely, especially as you see both campaigns saying that this is now going to be about the voters. The voters are going to be the ones to deliver the final verdict. And this is going to be really the first time, potentially, Biden is going to have to address this so head on. He's obviously going to be asked about this from reporters. Air Force One, a number of events he's going to have, he's going to be asked about this. But this is going to be a moment where he's going to face Trump and really have to say what he means about Trump being the first former president in American history to be convicted of crimes.
I'm looking forward to what they say about their tariff policies in that debate, as well as what their policies are going to be on immigration.
You're hopeful.
That's why Lisa's tuning in.
Bramo's hopeful. I think we're all hoping we get something like that. Let's see if we will. Let's see if we will. If you are just joining us, welcome to the program. Equity futures here down about 0.25% on the S&P. Some big moves on some single names in the last 24 hours. We'll be talking about that in just a moment. Let's get to the Bloomberg Brief with some news elsewhere this morning. Here's Danny Berger. Hey, Danny.
Hey, John. President Biden will allow Ukraine to launch U.S.-provided munitions against military targets inside a limited area of Russia. The president gave permission for strikes near the northeast border area of Kharkiv so Ukraine can help neutralize a Russian advance in the area. And here's one of those companies, John. Dell getting punished in the pre-market trade, down 14.38%, despite the fact that it reported its first revenue increase since 2022. But it wasn't enough. Investors had high expectations for the AI server business. And on that, in the post-earnings call, the CFO of Dell was questioned by a Bernstein analyst who posited that AI server margins were effectively zero. The CFO said she does expect demand to continue for the AI server business. Dell stock had more than tripled over the past 12 months heading into the report. Gap shares, though, they are surging in the pre-market trade, up 24%. It reported first quarter results that topped Wall Street estimates and raised its outlook for the full year. All of Gap's brands posted comparable sales gains and outperformed expectation. The company added Zach Posen as its creative director in February and has turned to celebrities to boost its visibility, with Anne Hathaway and Divine Joy Randolph sporting Gap dresses at the Met Gala and other recent fashion events. And that's your Bloomberg Brief, John.
Danny, thank you. If the 90s are back, Abercrombie's back, shouldn't Gap be back?
Oh, it's trying.
Right?
I mean, but do they go back to the staples, or do they still try to be,
I think it's the
fashion?
staples for Anne Hathaway. She recently wore this very cool-looking shirt dress, and I looked it up. It's from the Gap.
And you bought one?
I didn't buy it. I might go check it
Came
out.
close to buying. Okay, that's where we are. Up next on the program, looking for signs of a slowdown.
We're looking for the possibility of 1 to 2 cuts at the end of the year. We're looking for inflation to continue to come down and the economy to continue to slow down.
That conversation just around the corner with inflation data on deck this morning, 8:30 Eastern Time, live from New York. Good morning.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars. only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Closing out the week, down on the week, coming into this session, down on the day as well. We're down about 1/3 of 1% on the S&P 500. Yields just about unchanged, up almost a basis point on a 10-year 455.40. Under surveillance this morning, looking for signs of a slowdown.
We're looking for the possibility of 1 to 2 cuts at the end of the year. We're looking for inflation to continue to come down and the economy to continue to slow down. We are seeing inflation come down. I think that when we look at the next couple of quarters, we'll probably see some ebb and flow in terms of the economic outlook.
It's the latest on the outlook. Investors looking ahead to the Fed's preferred inflation gauge, PCE, due at 8:30 Eastern Time. U.S. Treasury yields easing after downward revisions to U.S. GDP and consumer spending. Peter Chia of Academy Securities saying this: "Well, my current view is the U.S. 10-year should trade in a 4.3 to 4.5% band. I'm rethinking that." Pete joins us now for more. Pete, let's go there. What are you thinking?
I'm beginning to get worried that we're going to see another rise to that 4.8, maybe 5%, where people start fixating on the deficit. One thing that's really kind of fairly new is Japanese government bond yields. The 10-year there is above 1%. So people have alternatives now to buying treasuries. I don't think we're there. I think the slowdown in economic data is going to keep us in that 430 to 450 range. But I am worried we're going to see one of these, continued grinds higher.
Pete, that's at the long end. Can we talk about the short end, the very front end? Coming into this week, after the long weekend, the Memorial Day weekend, you said that the clients you'd spoken to aren't concerned by the prospect of rate hikes. If they're not, what is driving this?
It does seem almost crazy. Everyone I talk to seems fairly, stable, right? 1 to 2 cuts this year, a couple next year, and really doesn't care. People really don't seem to care that much about the timing, yet the markets react to every bit of inflation data, every Fed speaker, as though it's, super important. So I can't tell whether it's algos driving it or something, and markets do seem incredibly illiquid to me. You see these kind of sloppy charts, you gap up and down intraday for no good reason. So I'm concerned that there's very little direct participation in this market, and this rally has been really driven by a lot of algos, by a lot of share repurchases, and you're not seeing a true, believer in this market.
When you talk about a lack of liquidity, is that just bonds, or are you also talking stocks?
I think across the board right now, when I look at equities intraday, right, you kind of, all of a sudden, wow, we're down 8 points, 9 points on the S&P, say 0.2% on nothing. And it moves and reverses. You had a couple really weird end-of-day closes. So I feel like it's very algo-driven, and there's no true depth of liquidity. And anytime, a real human comes through with a trade, markets move. And I think that's why we're very susceptible to a fast pullback again.
Well, just on that point, I guess, Peter, there's something interesting that's been happening where if any company reports earnings that not only miss, but just don't blow things out of the water, they get punished incredibly. I'm thinking of Dell, for example, down 15% after basically having fine earnings, just not really blockbuster. Does that have a broader significance to you in terms of what might be overpriced, if not bubblicious?
Yeah, I think it does. It's, go back a few months ago, it seemed awkward that you get these trillion-dollar market cap or large market cap companies swinging 10% after earnings, and that seemed unusual, and now it's become the norm. So again, I think we're priced to perfection on a lot of, areas. One thing that's been somewhat concerning is utilities have been such a good part of this market because that's been the latest kind of sector to grab this AI attention. I think we've overpriced AI. I think where AI is right now, we're overvaluing it. Companies are going to start pulling back a little bit on their purchases of it. And I think that's probably the big, decline comes from just a little bit of, air taken out of the sails of the whole AI and AI-related themes.
Including utilities, Peter?
Yeah, I think so. Again, nothing's going to happen overnight, right? It's almost like we fast forward and say, okay, we're going to build data centers here, there, everywhere. So we're going to utilities are going to make a lot of money. This is going to take time. There's competition too. Like Saudi Arabia, for example, is pretty well positioned to try and become a hub for data centers. So there's a lot of this going on, not just domestically but globally. And I think we kind of got far-fetched and too forward. Like, well, we can't buy this anymore because it's overvalued. But hey, we can buy this sector because no one's caught on to it. yeah, people have caught on to it. It's overdone. I think that's where we see this pullback.
When you look globally, overnight we did learn President Biden will allow Ukraine to hit some Russian targets with U.S. weaponry. This will be narrow, but this is a change of policy from the White House. You write in your note, how are markets so strong with all the geopolitical risk? Is this a fresh risk that markets need to be more attuned to?
You know, I think it's allowing Ukraine to prosecute the war more properly, I guess, for lack of a better word. Again, we've talked a lot within our generals and admirals here, and it was kind of ridiculous that what Russia was able to do was pull across the border, recoup, rearm, and be safe while they're across the border, and then go back into Ukraine. So I think this creates a slightly more level playing field in terms of Ukraine's ability to fight, and they can kind of do an early defense, and they can attack troops as they're pre-positioning to come over. But yeah, it's going to get riskier, and I think Russia-Ukraine is going to get very volatile into the summer. Of all the world leaders, it seems Putin would probably be most interested in having Trump reelected. So anything that's inflationary, disrupts oil flow, could be good for him. So I'm very concerned we're going to see disruption across commodities this summer, particularly led by Putin.
So Pete, big question for you. What do you like? What are you telling clients to buy?
You know, I still like China. I think we got toppy there. We were able to take some, chips off the table. I'm reloading there. I think China's going to continue to grow. And again, I think China's going to be pushing their brands. And the China growth is not going to benefit the U.S. as much as in the past. It's going to benefit China much more. I like India still. And I do like commodities, right? I think the growth story is there. I think the potential for disruptions there. So commodities, rebuilding. And there is all of a sudden a little bit of a chance that we start hearing peace talks ahead of the election as well with Russia and Ukraine, which again, I think would be very inflationary as Ukraine would have to rebuild very quickly. So I like commodities as a whole and anything that's kind of in the infrastructure and rebuilding sector.
Something you've been saying for a while, Pete. It's good to get your thoughts. Thank you, sir. Peter Chair there of Academy Securities. Some big moves we're seeing at a single name level. Let's check out Dow again. Lisa talked about it. That name is down by about 14% in the pre-market. The reaction from the south side, by the dip, JP Morgan, a more attractive buying opportunity. Morgan Stanley, Bramo, basically saying, while near-term expectations got ahead of themselves, confidently buying the dip.
I mean, a lot of people saying this is just simply a valuation question and very high expectations that weren't exactly met. I was looking through the numbers trying to understand what the negative was. Couldn't really find it. I mean, honestly, it just wasn't a blowout kind of result. There's a broader takeaway, though, from what he was saying, which is the lack of liquidity and lack of conviction. And I wonder how much some of the economic data kind of feeds into that. We don't know where we are economically. We don't have a macro framework, so algos can be in charge. And that, I think, also speaks to some of these big moves.
Another reason why we're getting whipsawed from data point to data point. Another big data point about 2 hours away, 8:30 Eastern Time, PCE, the last big data point before the Fed's quiet period, before the Federal Reserve decision in 2 Wednesdays' times. Coming up, Ellen Wald of the Atlantic Council as OPEC Plus looks to extend production cuts. That conversation up next from New York. You're watching Bloomberg TV.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
The S&P 500 going 5 weeks without losses. Based on the last couple of days, that's about to change. Equity futures down again by 1/3 of 1% on the S&P 500, down 1/2 of 1% on the NASDAQ. On the month on the NASDAQ, we're higher by a little more than 6 percentage points. Thank you, NVIDIA. NVIDIA is up by 28% month to date. Lisa, that is $558 billion plus of market cap added to that name.
That's just unfathomable. That's more than a Walmart added to this name. I mean, basically, when you're talking about market caps of $500 billion, it really is notable that we just had the worst back-to-back two-day performance on the S&P going back 4 weeks of a whole 1.3% decline. And basically, this is a market that has been range-bound with some massive moves in single names underpinning it.
And still trying to work out whether yields up or yields down is good or bad for equities. So let's go to the bond market. Yields are up, bad for stocks. Yields were down, bad for stocks. It's like the last couple of days. Yields were up on the back of soft auctions, bad for stocks. Yields were down on the back of bond-friendly data, according to BMO's Ian Lincoln, bad for stocks. What's the read across from this bond market to that equity market?
Well, the simple read would be bad news right now is bad news and good news is bad news. That basically the idea that potentially there could be fewer rate cuts or no rate cuts could be negative for equity valuations. There's a bigger read through, though, because I don't think everyone would agree with that. I think some people might say, well, it depends on why yields are staying high. If it's economic resilience, that could be good for equities. There is a lack of upward momentum right now in stocks that has been there for much of this year. It seems like that kind of momentum trade has faded. And that, I think, is a real takeaway for me.
Do you want an upside surprise?
Yeah.
2.9% core CPI out of the Eurozone. The Euro looks like this, 108.48, positive by 0.1%. We are still expecting this ECB to cut interest rates based on everything they've told us over the last month. But the conversation about the next meeting and the one after that, Lisa, gets a little bit more interesting. And incidentally, we're talking about US yields. Look at German bund yields. Yields are near or at the highs of the year on a German 10-year right now.
This is about them, the ECB not necessarily being able to cut in July or in September or in October. And basically, it just, the bar has gotten a lot higher to go further. It really has been 3 straight European CPI prints that came in hotter than expected. We got Germany, we got Spain, and then we got the general Eurozone. To me, that has to raise some eyebrows about, this is a hard beast to kill globally.
Next big read, 8:30, 2 hours away. Under surveillance this morning, the former president, Donald Trump, set to campaign for re-election as a convicted felon. A jury of 12 New Yorkers convicting him on all 34 counts related to a hush money payment to adult film star Stormy Daniels. Trump facing sentencing July 11th, just days before Anne-Marie, the Republican National Convention.
Yeah, the timing is interesting. And then before all of this, we're also going to have a debate between Trump and Biden. And that, for me, really matters, because what matters to market is this conviction resonates with the electorate. And if you look at polling, the electorate looks very fickle. So PBS News, NPR, Marist poll, they say 67% of voters said a convention would make no difference than in November. Marquette Law School, though, they say that a guilty verdict would produce a 4-point lead for Biden and not guilty to a 6-point lead for Trump. That says to me the electorate hasn't really decided if this matters. And until we know that, maybe it doesn't really matter for markets.
It clearly matters for fundraising based on the events we saw take place in the literal minutes after this verdict on both sides, the Biden campaign and the Trump campaign.
And that's one thing they also agree upon and fundraised on, that this is up to the American people to decide the verdict on November 5th. Sean McGuire, I was struck by, partner at Sequoia Capital, backed several of Elon Musk companies. We know Elon Musk and Trump have been cozying up to each other. Said he was donating more than $300,000 to Trump, the Trump world, because there are actually legal issues with how much you could donate to a single individual person. And this is what he said: timing isn't a coincidence. I don't see Wall Street backing down the same way Terry Haynes says maybe it's a little bit harder for some public-facing Fortune 500 CEOs to come in. But writ large, if you have money, we're seeing billionaires push Trump.
Although Terry Haynes was talking about the C-suites and sort of the C-suite CEOs and whether they would face more pressure, this is a hard thing to really focus on every day. Donald Trump comes out with this email: "I was just convicted in a rigged trial!" Exclamation point. "I am a political prisoner!" Exclamation point. Then people on the other side: "This is justice doing its or running its course." It's people just sort of in this, fishbowl, just sort of screaming at each other, and a lot of people are tuning out. So I just wonder at what point this really moves the needle, given the fact that, everything is kind of being undermined as facts kind of get disputed with no one kind of agreeing on them.
This is the campaign for the next 5-6 months.
Okay, thank you.
And it picks up in a much bigger way in about a month from now. That first debate is going to be absolutely huge. I think maybe even more so for the sitting president, how he navigates this issue now. I think for a lot of people, they felt yesterday he should stay away from this. He should stay away from this. And he's going to be able to stay away from it for the next several weeks. Can he on the debate stage a month today?
Well, I don't know whether Donald Trump will let him. He'll say, make this a mainstay of his campaign. He already has in the fundraising. So how does he respond to that without alienating people? And there are the Trump supporters, and there are the never Trumpers, and all the people in between. How do you sort of get them on board or not?
3 reasons why, according to Politico, Biden aides say that they're putting a little bit of daylight between them and this verdict. 1, there's no need to spike the football when the conviction is already dominating the news. 2, polling suggests the race will turn on other issues, so seizing the conviction potentially could be a trap. And 3, they can always readjust. They can always say, all right, we're going to move now, but let's wait, see the dust settle.
Libby Cantrell, PIMCO, that conversation about 30 minutes away. Don't miss that. Let's turn to the Fed speak. Fed President John Williams saying there's ample evidence that monetary policy is restrictive. President Logan adding policy may not be as restrictive as believed, but there's good reason to think we're headed to 2%. We'll get some data a little bit later this morning, 2 hours from now. But you just compare what we heard from Williams from what we heard from the former New York Fed President, Bill Dudley, right here on Bloomberg, and they are 2 very different views about how restrictive policy actually is.
You think that John Williams read the column, right?
I think so.
Yeah.
I think he probably did.
Or he watched Bloomberg.
Yeah, clearly. Well, John, I will say it seems like a pretty direct response. So I think we got the message that basically the mainstay, which is Powell and John Williams, they are 2 of the 3 biggies on the committee, expect this to continue to be ongoing disinflation, and that rate cuts should pick up speed. What then is the influence of the Kashkaris in the world, of the Logans in the world that come out and say, maybe we are dealing with a new framework, kind of echoing what Bill Dudley said?
Being restrictive or not is not much of a debate. Being sufficiently restrictive is the debate going into the FOMC next week, without a doubt.
Absolutely. In other words, how much further do they have to go? How much longer do they have to leave rates where they are? This concept of how much downward pressure is the current 5.25 to 5.5% rate putting on the economy is subject of massive debate. No economist can agree on this. So the fact that the Fed has to come out and rule on this, good luck. We feel for you.
Just a little bit of Fed speak later, and then we're done. Into the quiet period through next week, and out the other side, 2 Wednesdays away, an FOMC rate decision. Let's turn to OPEC. OPEC Plus meeting this weekend. The group of crude producers expected to extend voluntary cuts through the second half of the year. Bloomberg reporting cuts may stretch into 25 as exporters look to compete with record U.S. output. Ellen Wald at the Atlantic Council joins us now for more. Ellen, it's wonderful to catch up with you and get your perspective on this. We've seen before OPEC Plus meetings last 10, 11, 12 minutes. Is this one different?
I think this one is different because they're trying now to put together a much longer production cut extension. They're looking now well into 2025. And the issue there is that they want to redo some of the baseline production capacities for some of the different OPEC producers. Remember, we've got some really old production capacities that no longer reflect accurately what these countries can produce. And so they're kind of using this production production cut extension as a way to compel these countries to accept new quotas and new baseline capacities. And so it could take a bit longer, though a lot of this gets done behind the scenes. So as long as they've gotten agreement from everyone before they go into the meeting, it could be pretty short.
These Saudis, as you know, don't give us a price target. We all wish they would. Right now, the price is 81.45 on Brent crude. Is that the sweet spot for the Saudis? Are they comfortable with where price is and has been over the last few months?
I do think the Saudis are very comfortable with prices in the 80s. I think they prefer maybe more mid 80s if you want to get really specific, but anywhere in the 80s, I think the Saudis think is pretty good for them. Once you hit closer to the 90s, they tend to get kind of nervous about demand destruction, but that's just the Saudis. You've got other OPEC members definitely want to see prices on the higher end. They'd love to have prices in the 90s, but the Saudis always take this view that too high is not beneficial for them or for any other producers. Obviously, too low is not so good either.
When it comes to messaging, Ellen, what's the message for the fact that they decided to do this remotely and not in person, looking at each other, flying somewhere?
Yeah, I think that's a really good point. I was just thinking about that before coming on, and I think that the issue is mostly they want to try to avoid the spectacle, which is interesting because I think before they really embraced the spectacle, but I think they've come to realize that the spectacle can create more controversy